y'all.
Oh, I think I'm delayed here. Hello there. Hello to the one viewer. Looks like I got one. All right. That was the over-under. I was talking with my wife. She said it's going to be more or less than that. So hello to the one person viewing. And I don't have anything to say before we kick things off, except I dedicate this first stream to my sister. But let's get into it. So I don't really know how this stream is going to work out, if people are going to tune in or what you're interested in seeing. So if you have any comments or anything, just feel free to chat. But I'm just going to do my daily routine of tracking what happened in the market today. I actually have no idea what happened to the market. I was busy working on a new video that I'm going to upload hopefully tomorrow, but it's one on Gamestop, but I was making an updated one that I'll roll out soon. So anyway, I don't even know what happened on the market today, so let's dive into it. So I don't know if you've seen the other videos on my channel, but I got a number of spreadsheets that I use that I look through to track the market. This is just my dashboard here that I click through. It's broadly tracking a whole bunch of indices and commodities and a whole bunch of stuff. So let's just see here. Looks like a pretty quiet day. See some green today. All right, so some green for a change. That's nice. But still pretty quiet. I mean, the big days are when you see a whole bunch of green on here, a whole bunch of red. Not much happened today. And I don't know if you know, but I'm a little bit of a longer term investor. So the short term moves don't concern me too much unless they're major. That's really all I'm looking when I'm tuning into this. So Germany was up today. I don't even know what the news is there. But still, just 2.7%, so nothing much. Cocoa, that was up. Oil and gas. All right, so oil and gas is up. I know oil's been hovering at 40 bucks. Pretty steady. Been pretty weirdly steady, huh? Yeah, surprisingly steady after this. So it's holding its own. Who knows what the next move's going to be, you know? I mean, if it breaks above 42, 43, 44 bucks, then you expect it might start to run. It could always drop back down. Obviously, it just comes down to supply and demand. Right now, I'm just watching, just holding. I have a huge energy allocation that I can pull up here. I actually forget what it is right now. Can I pull that up? If I just scroll over to just the portfolio. That's often where I'm starting the day. I'm not so much starting with the dashboard. I kind of just do it because I feel like other people do it too. And that's something we can check out. But usually I'm just checking to see what the daily moves were. Oh, I got Gamestop highlighted because that was part of the video that I was working on today. Let me unhighlight that. But yeah, I got a whole bunch of any positions. So I'm sure these were up today because energy was up. Yeah, you see a whole bunch of them. Looks like natural gas. Was natural gas up today too? That's something to keep an eye on. So I have quite a bit of exposure to natural gas. I feel like that's just where is natural? How'd that do today? I mean, that's the thing with natural gas. I'm not really paying attention to the short-term moves in natural gas. Those things can be all over the place, just depending on the weather and stuff. When it's really hot, when it's really cold, it's more those longer-term moves in the equity prices. All right, so this was more just general energy was up today. Sorry, you're gonna notice that I jump all over the place, so I apologize. So industries, China was up today. Yeah, pretty quiet day overall. Here's some of the risk stocks that I'm tracking. Oil and gas. Oil, Baytex, that's an oil sands company. That was up 8%. Alcoa, man, Alcoa's been moving, huh? It's up over 100, 150% from the lows, I think. I do own that in the portfolio. It's probably moving up in size. Where is it up there? Yeah, look at this. Oh, man, I need to have this numbered. I don't know what number position that is, but it's up there. You can see Alcoa right here. It's a good chunk of it's a 1% position, but anyway, I think the average cost was like $5, $6, $7, something like that. So it could be. I know people are speculating, like, are commodities making a move? Are they starting to turn? And so in my dashboard, I have a whole bunch of charts I mean, usually I'm tracking what moves are happening based on what the what my positions are doing, right? If I see I have a whole bunch of commodity positions, if a whole bunch of commodity positions are making a move, I start to get a feel that things are turning. But sometimes I like to compare charts and stuff, and I said that's what I'm more of a value investor, fundamentals focused person. But I find the charts helpful for tracking like these broad moves across industries and sectors and commodities and styles. That's where I find it's helpful. So I like to compare some of the things. So if we're looking at, do I have one? I hope I have one of commodities versus. I don't know if I have one. I'm not even an expert on my own spreadsheet. But what I can do is just track this natural resources. This is just a high level chart. All right, so that's kind of flat over there. It's not long. I'd like a longer term one. Just like a broad commodity type index. Ah, shit. Do I not have one? That can't be. That can't be. Whatever. It doesn't matter. I guess, really, you could just take a peek at some of the oil and gas, E&P. I find that's just a good one to check out, too. All right, man, that's still flat. Look at that thing. Oh, wow. Look at that move, huh? It's been halved. Anyway, I don't have some quick way to check if commodity price is moving, but that's what I was getting at, that some people are speculating that there's going to be a multi-year transition back into, commodities and value stocks and kind of away from the growthier type companies. I have no idea. I don't know, but I hope so, because I have a lot of exposure to it, so we'll see what happens. But today's just one day. It's just one update. These things are all over the place. They're super volatile. Those are the types of positions I deal in. So even when I see like a day like today, 10, 12, 14%, I'm not even paying. It doesn't faze me, because I'll feel tomorrow on the downside when they're down just as much. So, but still, it's interesting to have this big of a move today, because I feel like it's been a couple of weeks. It hasn't been. I feel like it's been since June since value stocks and a lot of these energy positions have been bouncing up. So, all right, maybe things are swinging back in their favor. But let's see here. So RRC. Oh, so first of all, RFP. So this is one of my top positions here, right? This one's been moving. Look at this chart. This chart's looking really good. This was a position. Oh, I kind of get some opacity issues here. It looks like you can see my green screen in the back. But RFP. I've been an RFP for a while, and it has been a higher conviction play. And I was talking to someone literally on these 2 days saying that this could be one of my 10 baggers of this cycle. So every once in a while there's a huge down cycle, and I'll be looking at everything, trying to pick out what I think is a 10 bagger on the equity basis. Forget the options. And RFP was a stock that I've been in for about a year now. And it has the type of elements that interest an investor like me. I don't know if you've seen the other videos that I have on the channel, but I like to see like heavy insider ownership, especially by the owners heavy ownership by some firms that I respect. I know there's some value firms involved with this. Not so much the management. I do like to see management too, but they have legitimate assets and trades well below book. There's some debt issues to be wary about, but I wasn't that concerned about them. In fact, and now you get me thinking. You got me thinking about, wait a second, let me check up on these bond prices. Their bonds have held up really well. And that's because I feel like they have higher quality assets. They're not that. So they got some trading here. Yeah, 2023. So look at this. You still got them trading in the 90s here. And let's look up where they've been trading the past few months. Let me see this. Yeah, they never got that low. So there's a question or two, like where are they in seniority and stuff like that. And obviously they're above common shareholders and so forth. But if you got your bond, these are only a couple of years out. So when you're trading at 80 and you're only a couple of years out, it's like, what the hell? There's definitely a little bit of risk there, right? I'm not saying there's no risk, but it doesn't concern someone like me as much, because these are the types of stocks I deal in. So if they'll sell off and the bonds will trade down to 80 and the stock price will plummet. And I just try to assess, is the company going bankrupt? And I remember looking at RFP because I already had a pretty big position, so I was getting whacked in it too. I think my average cost was up there. I was in the 4s or something. I forget. But I was kind of buying on the way down a little bit, but everything was selling off. So I was buying a whole bunch of stuff. But I had my eye on RFP because when you have a huge sell-off like that, whatever positions you were tracking pretty closely and you had a higher conviction in, it's like, all right, this is going to sell off with everything else too. And do you keep on buying more and more? Do you start diversifying? I was doing more diversification this time around, and you may have seen I got a shit ton of positions here. I don't even know. Let's see. I should know. I have 100 and I have got 180 positions right now. 180. I'm pretty sure. I think this is up to date. Maybe it's a week out of date. I don't know. But usually, historically, usually I don't have this many positions. Again, I don't know if you saw the other video, other videos on the channel, but usually it's much more tighter. Like it's like 15, 20, 30 positions, but I diversified a whole bunch because of all that was going on. So I have a ton of positions. I'm ultimately going to sell out of all these, and I expect to have a much smaller position. But as I said in the video, it's perfect for the stream because now you can see a whole bunch of this. I don't know if you're trying to watch my screen here, I can go up a little bit higher and you can see some of these top positions that I have. So this is good because if you see what I have here, it will give you some insight into my style and the types of things I like to see. And that's why I think it's beneficial. So anyway, I have so many positions, so I'm tracking so much. I say I'm all over the place. I know I was talking about RFP, and then I'm just talking about the sheer number of positions. But so that's the thing. In a previous down cycle back in, I think it was late 2015, early 2016, you saw something similar, although it was more focused on like industrials and commodities and energy and materials and stuff. But those were trading in the gutter. And I don't know if you know, but if you remember, but oil was trading below $30, and that was a big deal at the time. Now we've seen it go negative, right? It's like negative prices. What the hell? And but anyway, back then a whole bunch of names were trading like super discounted prices, and I was picking up a whole bunch of them. Nowhere to this level, but it was more concentrated in those industries. And within those, I was like, which one of these could be those 5 baggers or those 10 baggers? And there were a couple of them that turned out to be 10 baggers. So this time around, I was asking myself the same question. We had a similar downturn in late 2018, but it wasn't quite to the extent of this. Late 2018 was a little bit different, but this so the best proxy for this downturn was more 2015, 2016 for someone like me. Anyway, so as I was looking at everything, trying to figure out which one of these is going to be that 10 bagger, then I have a higher conviction. And obviously, there's going to be a ton of 10 baggers. There's going to be 50 baggers, 100 baggers. That's always going to happen. But as far as me, which is the one that I'm gonna invest in, and I thought RFP might be it. Anyway, so that's a long-winded way of saying that it's looking like it's on pace, that it could get there. We're nowhere close to it yet. Right now, it's only up. It was only up about it was up 4. Is that 4x? Just about 4x from the lows. I mean, there's a couple of positions like that, but this one in particular, like I was saying, because this was a play I was in, so it had my attention. But yeah, it was some positive earnings results, and honestly, maybe I should pull it up right now. Let's do that, right? We're trying to figure out what to do. I booked this for 3 hours. I don't know if I can do it for 3 hours. We'll see. Let's check out. What am I say? So here's the thing. So here I just did a Google search, right? In fact, but I have all this bookmarked. So if I just see, I forget all the shortcuts that I've made for myself. So if I just go to RFP Resolute Forest Products and I pull it up, I can check the latest news releases because it will bring me right to that search, so I don't have to type it in. Again, I don't know if you saw the other videos, but I'm super lazy when it comes to my spreadsheet. So I'll read through this in just a minute. I don't want to get into reading yet. Again, that's my laziness. But anyway. So RFP started to turn around. So I got to dig a little bit deeper in because now it's getting to the point where it's like, all right, so it looks like things are stabilizing a bit. Should I keep on adding to this position? I'm not the type of value investor who only buys at those deep discount prices. I'll average on the way down. I'll average on the way up. It all just depends. So that's what I think that's a mistake that some value investors make. Is they just try to time that bottom, and if they miss it, they get pissed. I don't give a shit. I just like to see that I'm on the right path, and so I'll keep on adding to the position on the way up, especially if I think there continues to be a significant amount of upside. And with RFP, I do think that's the case. I still think even from here, it could probably be I forget. I want to say I thought it was worth like $10-15. I don't think I have a value stored here. So I try to have a value stored in here, but if you saw the other videos, I lose track of them over time. Although you probably didn't see the other videos, right? I apologize. They're super long. They're like 2 hours. I suck. I'm trying to get better at editing. This new video that I'm working on right now, I try to edit the shit out of it. It's taking me a couple of days. So But anyway, the values have fallen off, but I've kind of internalized what the values are, and right off the top of my head, without even digging into the... actually, watch this. So if I check off RFP, it should pop up. You see it turns yellow up there? It should pull up in my fundamental spreadsheet, so we can go check out the fundamentals in just a second, but I'm pretty sure I think it's worth like 10, 12, 15 bucks. So if that's the case, it still could be a triple or even a four-bagger looking out like 2 years, nothing imminent. Like, I mean, I didn't think it was going to be a four-bagger so quick. I have no idea. But that's one that's sticking out to me. And so there's a couple of positions like this that I'm as they continue to rise and it looks like I'm on the right page, I try to dig in deeper and try to figure out, do I keep on adding? RRC is another one that I got really lucky on my timing. Like really, like I nailed it early March. That was luck. Don't get the wrong impression. But I literally was buying on this day. I bought calls on this day and this day. Like, I got really lucky on that front. Anyway, part of the thesis here is a very simple, very basic, is that these natural gas equities, I don't know if you have been following them, but they've been trading like shit for a long-ass time. And just that alone, you know what I mean? Like, I know that's not a comprehensive thesis, but this is the thing about the markets. You don't need in my opinion, everyone's different. Sometimes you don't need that comprehensive of a thesis. It can be as simple as like, all right, this has been trading like dog shit for a number of years. And when that happens, just by nature of supply and demand, you can expect supply to, you get supply cuts and ultimately lower prices result in higher prices down the line, right? So that's just the way the markets work. It's just a question of when is it finally going to turn? When's that turning point? And that's obviously difficult, but I find I just like to wait. Like, all right, yeah, this is getting kind of cheap. And but it's still kind of stabilizing. You like to see like that one final sell-off where it's like, oh, or even the people who are bullish are like, I'm such an idiot. I like to kind of wait for that moment. It's hard. I'm not that good at it, but I'm trying to get better. And so when I saw this, I already owned RRC just like I owned RFP, and it was, I owned a couple of natural gas players. It wasn't my only one, but it was one of my higher conviction plays. And I thought it was a little bit levered. I thought it could be a survivor in case everything really went to shit. And then there was so I just lost my right click tool. Did I still have this? But there was a huge, there was a huge insider buy in early March right here. This was the day. This is why it was filed on March 11th, right? And off the top of my head, I forget, but I'm pretty sure this guy was the CEO or the founder of XPO, or is that the right name? Is that the logistics company? No, the energy company, whatever the acronym is for that energy company that kicked ass. I think it was in the early 2000s. This is all from memory. I'm probably getting some details wrong, but I looked into him at the time, like $2 million. You don't see too many $2 million purchases one-off like that, especially from a guy like, well, I wouldn't say a guy like this, but in a speculative company like that, I'm like, holy shit. And it was happening during a major sell-off, right? Like because I was in RRC, I was tracking this. I was like, holy fuck, these prices are crazy, right? Did I lose it there? For me, in my opinion, based on what I thought it was worth, yeah, it was low twos, or trading below twos, and I saw that $2 million purchase. And when I looked into his history, I'm like, all right, this guy knows his shit. He knows, he's got the experience, he's got the expertise to understand what's going on here. So when I saw him buy, I'm like, all right, I'll get involved too, or I continued to add. So now I got to start digging into RRC some more and just get the story. Just make sure, as I look at all the natural gas players, it looks like we're starting to see this turnaround. And this is why the charts are a good shortcut, because if you just start popping in a whole bunch of them, you can just start see that. I mean, this is where I kind of lean on the charts, because you can do the supply and demand stuff, but I'm not that great at supply and demand and trying to figure out when it's turning. I find it's much more helpful for someone like me to just see what the price is doing. Whereas if I'm really trying to get a heavy position in something, that's where I'm really digging into the fundamentals. But here I'm just trying to see the trend. And this, of course, it all revolves around natural gas. But they all seem like they could be turning around. And maybe I just got lucky, and now that downtrend is going to resume. I'm really not sure. What's the other one? SWN. But it's looking like it could be heading up. They've all kind of been up. Where's AR? So it's a tough call, but now I got some. Now is the February, March, and April. Those are easy decisions. Because unless everything's gonna unless everything's falling apart, then the prices are probably gonna bounce back. But now it gets a little bit tougher as prices rebound, and then you're like, all right, these might only be 2 or 3 baggers. So you got to start figuring out what you're gonna do. So anyway, RRC is another one. CNR is another one. I mean, I don't know what I'm doing here if I'm going to go through each one, but I just, they were right next to each other, so I was I'm going to check them out. But let's go check out RFP. So if I have I got the fundamental spreadsheet open, I believe. Oh, which one would it be in? This one? Oh, you know what? I got to do this one. Okay. I should have had this open. What else is moving today? Oh, CNR was up 11% today too. Okay. They do some building products. That's an interesting play. This one has been on my radar too. It's still, I think CNR is still pretty discounted because there's some PE firms involved there, and I mean it's a play on real estate to a degree too. I get that, but it's super leveraged. But it's they got no covenants on their debt, I believe, if I recall correctly, and so there's a lot of leverage at play here. So that if things start moving in its favor, especially if it starts turning profitable, and or generating a more sizable profit, then it's probably going to go up quite a bit. But it was a big merge. This is the company as a result of a merger. It used to be. The ticker was like NCI or something. What the hell was it? And that was I think that was the name of the company too, like NCI something. I forget. But that's another one that. See, now of these, I mean, I still own RRC. I'm probably less compelled. I don't know. That's the thing about natural gas. Sorry, I'm all over the place. But that's the thing about natural gas is like, with such a bearish chart as you saw, with all these, right? That you don't want. If the trend is turning, and I don't know that it is, right? I wish I did. But if the trend is turning, this is a multi-year. This could very well keep running. Where these could be even triples and quadruples from here. But it's more of a multi-year play as opposed to, all right, this is going to happen within 12 months. I'm not so sure. But we already got a triple on RRC, almost a quadruple. So it's like, all right, you might take some profits and then reassess. That's not what I'm doing. I'm just thinking out loud here as I scroll through stuff. So, all right, let's check out RFP. Is that my, oh, that's not the one I wanted. Don't I want, what's the report that I want? I lose my thing? Oh, I thought I had these all, oh, I thought I had them. Did I lose them? Hold on, just one sec. If you saw the other videos, you know I got these spreadsheets. Oh, there we go. Okay, you see, so I got those checkboxes, right? Those checkboxes bring me over if I want to investigate the fundamentals, which I often do. Like I said, I mentioned, I mean, I'm looking at some macro trends and stuff, and I'm looking at charts, but those are more just like bolt-on tools that I have. I'm a fundamentals-focused investor, so if something catches my eye, if I see insider buying or something, or something odd going on, I'll then go dig into the. Oh, is that why? RFP. Oh, that's why. Oh, sorry. So that's why it's blank. It's because I just unchecked a whole bunch of. I'm an idiot. I just unchecked a whole bunch of companies, so I had a smaller number of them in here. RFP, it's here. Why didn't you tell me RFP was in this spreadsheet? Maybe you did. I wasn't listening. So if I click this, does it bring me right to it? Yeah. Check this out. Is it working? Yeah, okay, it's working. There we go. All right, are these fundamentals up to date? No, I don't think they are. So it looks like it was March 31st latest. I use ShareRadar data. March 31st. All right, so it's a couple months delayed. And we just saw they had an updated press release. Actually, the one thing I just want to check really quickly is just, did they have a loss? Did they have a loss for the quarter? Did book value go down? See how simple the thesis is? I just want to see if book value went down. All right, 1.2. And it was at 1.2 in December. So whatever it was, Q1, it doesn't matter. It's still there. So it's staying flat. So do they have a profit? You think I should know that? Oh, shit, they did. Fuck. Okay. All right, that's legit. Was there anything unusual? So I got to read through this press release. And that's the question. Am I going to do that during this stream? Am I going to read press releases as part? Like, that's what I do as part of my analysis. Like, something like this will catch my attention. And then maybe if you're tuning in and you're curious about it too, maybe you'll be reading it yourself. So I guess in that case, it would be fine. But just right off the bat, I'm seeing the book value stayed the same. It was profitable. And I have one thing I've been checking with RFP is I wanted to see some action. I wanted to see something happen. Like some filings, like some insider buying. You don't see too much insider buying with RFP, or I wanted to see those large owners of the company buy even more, or something. I don't know. I just wanted to see something, or someone, a new person take a position, and there wasn't really anything happening. And that's because oftentimes when you have some firms or the management themselves have large positions in the company, it turns off. I mean, I like it, right? It turns me on, but it turns off other large investors because they're like, all right, that company is theirs. They kind of have control of it, and the investors who own this company, they do have. I mean, it's Prem Watsa, right? I believe it's Watsa, and is it Choi? Is it Choi? I think those are the two. And they had like 30 or 40% of the company. So it's their company, and it's just a question of what, I think they might own the debt too. I don't know. But anyway, nothing was happening, which wasn't too surprising. But if something was happening, like, again, anything like that I just listed, I probably would have bought even more of it. But anyway, looks like things are looking good. Maybe I'll come back to this press release later. But what was I gonna? Just wanted to take another peek at those fundamentals. Look at this. Yeah, so book value, yeah, $14. Wow, this is more than I thought. Yeah, I remember when I was. All right, so I mean, it's been throwing off losses, but it can be. It's super volatile business. But if you look at the free cash flow, like every once in a while, they throw off like huge amounts of free cash flow. You can see in look at this in 2019, which it was 2018 was the big year, and they had like $6 per share in free cash flow. They still get a ton of debt. It's a levered play, right? But we checked out the bonds; they're still trading pretty solidly, and. But yeah, and they got pension liabilities too, if I recall correctly. That's a big chunk of this. That's a big chunk of this right here. So this row, this net common overhead. Oh, perfect. So I forgot that I got some definitions in here for you. So this is great. So you can see the long-term liabilities plus short-term debt minus excess. So that takes all the long-term liabilities, which is fine for this company because I want to know those pension. That's not true. Those pension liabilities are legitimate liabilities, but they're not imminent or anything like that. And it's a little bit different, but it's still noteworthy. I still wish it was a separate line item. I take issue with some of the classifications of share radar. In this case, I wish pension was, but it's difficult to do this. It can be difficult to categorize these something, but I don't know, pensions, isn't that pretty straightforward? I'm sure it's an automated process, which is what makes it difficult. But then also for the retailers, like the leases and stuff, those leases should not be categorized as debt. So sometimes when I'm looking at this net common overhang figure, like for Gamestop, for example, I think I just had it up, didn't I? Yeah. Look, it's net common overhang $12 versus book value like that. It's like, yeah, they have some debt, but it's the leases too, and it's just a pain in the ass. At the very least, it would be nice if they were just separated in the data. But anyway, in RFP's case though, so a lot of that debt is pensions, and see, this is the thing. So I built this up. So if I did want to dig deeper, I don't know that I want to right now. If I go to the SEC, pull it up. And that just bring us right to the balance sheet, right there. Oh, we had it up. Does it list pensions here? Yeah. Oh, perfect. There you go. So pension and other post-retirement. So there you go. So there's a whole bunch of pension liabilities there. And how much is the debt? 600. So you see what I mean? It's like mostly pension. 1.3, 600 million, but still levered. But does it have? Oh, it's got a deficit. Oh, you know what? The other catalyst I was looking for, maybe share repurchases. They announced something weird in early. Was it early this year or late last year? They were going to do like a share repurchase of like 100 million. It was something weird, whatever it was. And it was like, are they buying it from the large owners? Were they just trying to get out of their position so they're selling to the company, which is super sketchy, right? I mean, I don't even know did they do it? I don't even know if they did it. Now I kind of want to check that out because that's the thing. I was like, oh, they could buy if they. That's the thing. Like all these prices, all these stocks selling off so crazily this year. Like this is the time to be buying back your share. So it's great for some of the companies that are like some. Same thing for the bonds too. There's some company. I got AR up here, right? They were buying back their bonds. But anyway, I was like RFP. Like I hope you buy back some shares. I don't think they did. Then I don't know how. I don't know what's going on there. Where's that press release? Oh, it was March? Holy. Oh, man, it's been a long couple months, huh? I would say early this year, late last year, it was March. Whoa, I remember reading this. But, whoa, okay. Yeah, look at this, 100 million. Yeah, okay, or up to 15%. But did they do it? Was there share repurchase? Oh, shit, check that in the press release. Okay. It's not that much. 4 million shares. It was this average. I don't care about the like they do the weighted average. I don't care about weighted average. I want to know what the share count is right now and what it was at the end. I mean, I get why people use it, but it's useless to me, weighted average. Anyway, it's whatever the actual count is. Okay, so they did buy back some shares. Did they? Damn. Corporate and finance. Let's see. Did they announce it here? Oh, and more importantly, so I said they turned a profit, which is a good sign. But I mean, what I often want to see for a company levered like this, especially if it's distressed, is did they generate positive free cash flow or operating cash flow at the very least? Let me just see here. Did they announce? First quarter draws only 180 million. All right, so I don't know if they did this quarter, but they bought some back in the past 12 months. But anyway, I was hoping for something more. I didn't think it with RFP, unfortunately. But there's some companies. That's the thing, like GameStop. I mean, if you saw my channel, you know I got that video on GameStop, and I'm eager to roll out the other one because it's more succinct. But they bought back a shit ton of shares last year, and I was trying to assess what's the likelihood they're going to do it. And at first, I didn't. If you saw Barry's letter and stuff, sorry, I'm jumping over here, but this relates to share repurchases. But if you saw GameStop, there was a lot of speculation as to whether or not they would buy back all those shares with the heavy short interest and eat up a lot of those, eat up a lot of the volume. And from I don't know if you were following GameStop at all when that press release came out for Q2 last year, Q1 last year, they announced that they weren't going to repurchase any shares. And then 3 days later, they changed their mind, and then they said they were gonna. They did the Dutch auction, which was also super weird. But then I'm like, all right, then they're not really eager to buy back shares. And then they did late last year, and that threw me off because I was like, wait a second, are they gonna? And then they did. They bought back a ton of them, and I was like, whoa. But then they haven't over the past 6-9 months now. So this is the thing. I bring up GameStop as an example of I'm trying to gauge whether or not it's likely they're gonna buy back shares. And obviously, if they're a shareholder-friendly company and they understand capital allocation, then you'd be more bullish about it. Maybe you'd buy more shares, but I didn't suspect it with RFP, and unfortunately I was right, so that sucks. But nevertheless, it's still up 3x. See, it didn't even 3x from the lows, but not up much from where it was. It's not even up. It's still down. This is the thing. So this is why RFP still might be a compelling opportunity because it's look at this. So this is the thing. Like I'm a fundamental investor, right? But then I see shit like this. Look at this chart. It got right up to it's a resistance right there. But if it breaks out above, who knows? I don't know. But so that's the thing. So if it held it, is it going to hold it? What's it going to do now? Well, I'm more of I have a longer term outlook most of the time. So I kind of prefer the weekly charts. That's what they say. That's what the technical analyst books say. Is that whatever your time horizon is, those are the charts you should be using. And on this front, we didn't even get back to it yet. So, but then isn't there a case to be made that you could buy it at $3, sell it $4? I don't know. But okay. All right. So where was it? I just want to check out the RFP fundamentals just one more time. They still look at this positive EBITDA this whole time. I mean, how reliable is EBITDA? Is it okay? It's not a good proxy for earnings, but nevertheless, the companies I'm dealing in, I like to see positive EBITDA at the very least. Positive operating cash flow. This is trailing 12 months, by the way. So this doesn't mean it was positive operating cash flow the past quarter, but maybe it was. What am I doing? That's what I meant to just check one quick time. $76, yeah. Oh, I think we just read that in the paragraph too. Oh, they had an acquisition too. That's right. Was it Mills? Sawmills or something? Newsprint and special paper have been combined to form the. Is that the footnote? That seems like a different footnote. Oh, here it is. We acquired Conifex Timber, all of the equity securities. Yeah. So what the hell are they doing? What are they doing? Yes. I don't know the details of the acquisition, and it could be a good investment. It could be, but when I see what was this? Was it this quarter? Right? I mean, we're looking at the quarter. Oh, 6 months. 6 months. I actually think it was the quarter prior. Oh, does it say the date on there? Sorry, I know I'm scrolling all over the place. February 1st. So it was the last quarter. It was kind of before their price totally went to shit. But this is the thing, like that 170 million, I don't know for sure, but I'm willing to bet that money would have been better spent on share repurchases in Q2. I'm not sure. I didn't pour over the figures. How much? I'm not even going to have that much access to the information anyway. But that's why it can be good. That's why I mean, having cash on the books, it can be a good thing. But yeah, bummer for RFP shareholders who could have seen I am an RFP shareholder in the Roaring Kitty portfolio here. But what's the position? Oh, it's a 2% position. So I mean, too bad, missed opportunity. But whatever. This is how it works. This is how the market works. So market cap still 300 million. Okay, look at that, 300 million market cap. They bought that for 170 million. So obviously management and I suppose the investors too do believe the company's worth way more than it currently is. If you're doing an acquisition for using, I mean, that costs half of your prevailing market cap. Pretty crazy. All right, so all right, is there anything else that I wanted to check out here? As I'm looking through this, based on my, let me get, if I may just quickly just read this, just quickly. I just want to get a feel for the type of shit that mostly the outlook. But I don't really care. Reduce debt. All right, they paid off some debt, so they've definitely been more focused on the debt side of things, for better or worse. Just saying, successfully integrated the sawmills. Okay, I like to check the quotes too from management. Like this is a case of if I'm really digging into a company, then you want to check the transcript too. So I think do I have a shortcut here? Let me see. SAT RFP Circ. And it's up 10%. Oh, right. And Seeking Alpha's gotten they've gotten better at the transcript. This is great. Like this was yesterday, and they're already up, and they're fairly accurate, and they do a good job. So thank you, Seeking Alpha. I'm not going to read through this right now. I just wanted to just bring that up. All right, but this is me. So if I'm digging in deep, I'll read the whole I'll read every single quote that they had during the conference call. But in this case, I'd feel comfortable just reading the just the quotes and some of the data coming from the press release. And so we can slow down. Yep. Yeah, grateful. Yeah, unprecedented challenges pulled together. Despite the challenging business environment, except for the low-interest term loan used to finance the acquisition. Oh, they use debt. They use the low-interest term loan. What is this? I guess. Okay, I'm no forestry expert, I suppose, but using a term loan to buy an acquisition for $170 million? Whatever. We've seen stronger pulp pricing and higher shipments. So this is the thing. So check lumber. Watch this. Oh, I don't have lumber? All right. Oh, I got lumber in the dash. Oh, is this going to work? Come on. Nice. And then I got in the commodities, lumber. Okay, so check this. Let's see if this works. I don't know what this is. You could do the colon and compare the two, but I just want to see. So lumber's, I did know this. Lumber's been going up crazy. People have been bullish, more increasingly bullish on real estate with all that's going on, and the home builders. Whew, those have been huge winners. I picked up a bunch of those, and those have been the ones that I've taken quite a bit of gains on because they've gone up like just so much, anyway, they're reflective of this trend as well. And but CNR kind of lagging on that front. But anyway, but let me do a 5-year. 3-year. 5-year. No, 5-year. I want 5-year. So check this. So this is where RFP was. This is that's lumber. All right, so this is the lumber chart. This is lumber. And you're going to see I believe you're going to see a very similar trend with RMP. Let me just check. Kind of. It's kind of similar. It just sold off way harder, right? But you see that big run up. Almost, is it exactly the same? Like a quarter delayed. I had noticed that last time, and I know to keep my eye on lumber, not just for RFP. I mean, obviously for RFP, the industry that it's in. But lumber pertains to a number of industries. But yeah, so lumber's been crushing it, so I'm not too surprised that RFP is bouncing back. Anyway, and those home builders taking off. So yeah, what's lumber? Let me just double check lumber. What's it doing now? Haven't checked up on it in a couple of weeks. Just a huge, and this is volatile too. Look at this. I mean, you have people that go overboard, and then they go underboard. Then it levels off. This might be. You can. This is. If it works, this is where the overbought stuff comes in handy. If people are getting too greedy with it, I don't know. But okay, so this looks. Okay. Just good for me to try to. I'll try to remember this as I'm looking, and this is why I'll be looking at stuff, and this is why I always get myself off track, because I'll be looking at one thing and I'll see another thing. And I'm like, all right, I need to check out this too. And my hope being that everything's gonna stick with me, so that when I continue to look at other stocks and stuff, it's all still in my head. And if I look at home builder or something, I'm like, oh yeah, I remember I just looked at lumber, and that's where the prices were. Anyway, pleased with the integration. Yep. And you could break it down by segment. If I were really like, so if you saw my other video on Gamestop, sometimes I get really I get dialed into like a handful of companies every once in a while, and but most of the plays, most of the positions in the Roaring Kitty portfolio, it's just not. For most of them in the Roaring Kitty portfolio, it's not necessary to dig in deep. Because even if I read through and I become an expert on each of their individual segments, it doesn't help me much. It doesn't add much. Where the real value is, and is getting a good approximation as to what the value of RFP is, and then when it trades well below that, then buy it. The nuances of the business model don't concern me too much. They're super relevant. I'm not saying it doesn't matter. It just depends on the position, what I'm trying to get out of it. In this case, it just doesn't help me much by looking over the details in this particular case. Okay, so let's check the outlook. Short-term priorities to the first quarter. Significant slowdown in economic activity. Surprise, surprise. They expect it to continue to impact demand for paper products. Yep. And we'll adjust our capacity as conditions evolve. Pulp has benefited. I'm reading this paragraph right here, sorry. We continue to drive portfolio. Yep. We expect to continue to gain momentum in the coming quarters. Most people do, right? It's kind of a nothing statement. The lumber market lately has been a bright spot against what were pessimistic expectations in April. That's absolutely true. Driven by the strength of the repair and remodeling market. Yep. Stronger housing starts. That's the thing. Housing still looks good. This is why I went pretty heavy into the home builders and a whole bunch of home stocks, because I'm no expert on the industry per se, but I just thought a lot of the secular trends seem like they could still be bullish on for home buying. And anyway, so I'm not too surprised that it bounced back as strongly as it did. I actually think it might. I think it's going to hold up. I don't think this is a temporary blip. I think it still has, from what I read other people who are better than me at reading those types of things, and they seem to think that it's going to persist for a number of years. And from what little expertise I have, I think it's going to persist for a number of years too. Driven by the strength. Yep. Integration of the U.S. lumber assets. Yep. All right. Not much new, but I'm happy to see. So in this case, I see this, and then I compare it to what the chart's doing, and it just seems like we're on pace. If I were using the chart for timing, what would I be doing right now? Let's say the market was open. I was trying to figure out if I'm trying to, obviously I already own it, so I wouldn't be buying it outright, but would I be adding to the position here? And this is where I kind of look at the charts for something like this. We noted the resistance here. Then it's getting back up there. What's the position? What did we say it was? 2%? One. I popped this up. I see it on my screen over here. I'm losing track of my screens. 2%. So it's already a good sized position. I think I'd wait for a pullback. Maybe it pulls back to like 250 or something. I'd probably buy some more. Now it's like things are looking good. I mean, if the market sells off, that's the thing. With a lot of the positions that I'm dealing with, if the market sells off, forget about it. I mean, all of these are going to go down. It makes no difference. That's so the charts just come in handy to be like, all right, well, if it doesn't fall apart, is this a good time to add? And in this case, I don't think I think I'd hold off. 2% is a good sized position. But on a pullback, as long as things are still looking good, and they seem to be, and at least I like to see that the market's acknowledging RFP's presence. It's a lot of stocks, they just get ignored by the market. I think GME is not one of them. It's the most shorted stock. But I'm talking about like smaller companies that it's not on many people's radar, and no one's paying attention to it. When I see this chart, people have been paying attention to it, but now that it's gotten roughly back to its previous levels, maybe it's kind of going to slow down. But yeah, all right. So that's RFP. Was XOP the right name? Oh, XOP. What was that? It doesn't matter. Let me just quickly check this. North American Natural Resources. Boy, it bounced back strongly, and now it's just holding. March was a great time to buy. A lot of stuff. All right, I'm done with RFP. What time is it? 7:46. Look at how much time we wasted on RFP, huh? And I'm not even adding to it. What a pain. So AR, this one was up today, right? Up quite a bit, along with RRC was 12%. What was do I have Antero? If I don't have it in here, do I? Oh, so do I need to Command F? Oh, that's kind of a drag of this spreadsheet. Oh, I do. I'm surprised it's this low of a position. I have a whole bunch of natural gas plays, but I do have some positions in AR elsewhere as well. 15%. Oh, I thought it was up more than that. Wasn't it up more than that today? Oh, it pulled back a little bit, but that's another one that looks. They were buying. I was talking about buybacks. They were buying back their bonds, I believe, a whole bunch of their bonds, which I like to see there. The inside there, I think it's a couple of guys who are up, who are. It's a indebted company, but that's an example of a management team who kind of seems like they know what they're doing on the front, like the capital allocation front. They're like buying back bonds. I think they might even be buying back shares. I think they bought it. Did they buy back a shit ton of shares? Hold on, let me just check this. Let's pull it up. I think they did. And so when I see that stuff, and all the books say this, right? When you start seeing that they're shareholder friendly, right? That's the phrase. Are they shareholder friendly? Sometimes you think they're doing it to help the shareholders, and then it turns out to be a bad idea. So let's see. Did that pull up? Oh, look at that. Oh, that's quick. Is it already populated? No, it's probably not populated yet, is it? Oh, it's going to a different spreadsheet. Is it going to load? I haven't tested this in a while. Let's see. It's taking a long time to load. See, that's a bummer. That's when I have to go to a new spreadsheet and kind of take, oh, all right, it's still loaded. This is faster than I'm used to, so that's good. Yeah, look at this. Trades at $3 per share. Book value is $22 per share. Now, obviously, that begs the question, is that a legitimate book value? But I just wanted to see, oh, yeah, they were buying back shares. That's what I mean. I'm pretty sure they're buying back bonds and they're buying back shares. And this is a super leveraged company. And let me just check their bonds. I think the bonds were holding up decent. No, I had a position in AR, and then I saw the bonds. They were trading really, really low. And then they're still kind of low. Look at this, 2025. Let me just see how low they went. And I started to wonder. I'm like, oh, let's see. Yeah, so they've gotten really, look at that, $26. That's on the cusp for me. Of the natural gas play, of the ones I actually own, there's riskier ones than Antero. This was the riskiest one that I felt I owned, and I saw that. I'm like, I bought more of my stronger players. I think I did buy. I have some calls here as well, but I didn't average down. I averaged down on my calls a whole bunch in late March and early April, but I didn't for this one. And so things like I have a bunch of winners, right? But it's the ones that I was kind of dialed into and didn't pull the trigger on that I'm most frustrated about. But that's the thing. So there's a couple examples like Antero, but because that's the thing, because this company kind of seems to have a little bit of a shareholder friendly. I think they're owners themselves. I think they own I think the managers own 10% of the company. There's a couple of guys, don't they do they got AM too, the other company? Or it was a spinoff, or I forget the full story. So this, I don't know if you know Whale Wisdom, you can see some insider ownership. This is a good website. Paul Rady, that's one of them. Who's the other guy? He's owned 6%. Look at this, 6%. I thought there was one more guy. No? Doesn't matter. 6%. That's 6% of how big is this company? $15 today. Nice. It's $1 billion company. Whoa. Oh, so that's the other thing too. When I'm assessing whether or not the company's going to stick around and if it's going to survive, I'm looking at the bond prices, like I said. But even though it was they're trading at 26, so it was like it's still a sizable company. Doesn't mean it's not going bankrupt, of course. But I deal in so many much smaller companies where I'm like, they just don't have. There's just not enough investor interest for this to survive. But Antero kind of had it. So $1 billion, he has 6% of it. They were buying back bonds, buying back shares. But if I'm being honest with myself, I was buying a whole bunch of positions, right? But it was definitely, this weighed on me. I remember looking, that was March 16th, and it was kind of bouncing up. Oh, it was still, and then it was above 30. And let's look at the short-term ones. What were the short-term ones trading at? I was probably looking at these two. I mean, if the short-term ones are in the gutter, then forget about it. This 2025 is not that far out, but it's further than these ones. And so how low did these go? $40. So that's what I mean. This one was right on the line. There's another one too that I'm really pissed about was Matador Resources. MTDR. Look at this insider buy. I'm sorry, I got to bring this up because I guess I'm a mouse. Like, look at this. Oh, look at this. They continued to buy into March right after that big huge sell off, and then everything got crazy. They were still buying. Look at this, March 13th, and I had been watching it for like 15 months or 18 months, and then obviously all energy companies sold off, right? I mean, what a month of March for energy companies, jeez. And then I'm like, all right. And then I thought, but there was the bond prices for Matador too. There was like, and I think another one, I forget what the bond prices of Tenneco were, but then I thought Tenneco, TEN, I thought that one was going to be in trouble too. There's like 5 I mean, you see how many companies I own, right? What did we count? 180 plus, but there's like 5 companies that I was really following closely, and I couldn't pull the trigger. And so that's the thing. When the market's selling off, this is my opinion, and feel free to share your views. When the market's selling off like that, and everything's trading in the gutter, and what I'm often just trying to do is just, I already have a good sense of what the value is and whether or not the price is going to bounce back. I have a good idea, but I'm just trying to assess whether the company's going to go bankrupt. And so I'm heavily relying on these bond prices and stuff, and I'm trying to assess. All right, I don't want to deal with the hassle of bankruptcy, so I try to avoid those companies. But in times like March, if you're not investing in some companies that go bankrupt, you're not doing it right. If I have 180 companies in the portfolio, I don't know how many. Right now, a lot of those positions are really small positions, like 5-share nominal positions. So maybe it's closer to 150. But if you have that many positions, some of them better damn well be going bankrupt, because if they're not, you didn't take enough risk. This is my opinion. Everyone's different. My strategy, my investment strategy might not be a good fit for you, of course, right? That goes without saying. Hopefully you know that. But for my strategy, that's how I'm approaching it. Like, some of these should go bankrupt. And as I look back, even though the portfolio has bounced back quite well, not enough went bankrupt. I think I was in that Latin American airline, was it LATM? But after it filed for bankruptcy, I was still up like 50% or something crazy. But I think that was the only one. Oh, TLRD just went bankrupt. I had owned that beforehand. I think in one of my other videos, I said it was toast. You could tell it was going bankrupt. It was clear for the past like 2 or 3 months, I think. But that's not a good example, because I had already kind of been dabbling in that. But that was really looking messy. But as far as new established positions, I'm a little bit annoyed that I didn't buy more. And this, I'm mad I didn't buy more of Antero. I do own Antero, and like I said, I got some calls on it as well. But Matador, it has the insider buying. It had the book value. It had what I consider kind of higher quality assets. It had traded at a fairly good premium the past couple of years. And then like Tenneco, there's like 5 of them. I can't remember off the top of my head. But anyway, I'm going all over the place. I know I am. I need a drink. But bond price is super important to keep your eye on. So anyway, it's looking like the managers of Antero are doing a good job. They might pull this shit off. In which case, I mean, like I mentioned, I was talking about RRC. But if the tide is turning on natural gas, this is the thing. If you look at the natural gas chart itself, that's not really that helpful, because it's all over the place, right? Super vol. Oh, look at it. Oh, it's at 210. Hey, why didn't you tell me? I told you I didn't check that. What is this today? This is weekly, right? Is this weekly? Oh shit! Today? Oh well, no shit. Well, no wonder. How come that didn't pop up on the dashboard? How did I miss that? Where are the prices? Yeah. Oh. So there's something wrong with my conditional formatting. Oh, I gotta fix that. So this should have lit up green, and we would have talked about it, right? Look at this was the mover of the day. Oh, now I feel like an idiot, right? I saw all my natural gas positions go up. Like that's up quite a bit today, and I this is why if you see my other videos, I rely heavily on conditional formatting. It really saves me a lot of time, and in this case, I missed it because of that. So anyway, so natural gas up. But what was the news today? Do you know the news? I don't even know the news. What we can do is natural gas prices, maybe? Some news? Here we go. Why natural gas prices just exploded? This is they're volatile though. They're all over the place. Is it the weather? Are we forecasting hot weather? The weather's going to be hot. Oh, there you go. Oh, see what I mean? I don't even need to look. Hot weather. But nearly 20% as traders hold out hope for anything that will contribute to a reduction in nat gas stockpiles, right? Of course, supply and demand. But anyway, if you're looking at just the price of natural gas, this is tough. Oh, that's a... What is this? This is daily. So you want to probably look at weekly. Okay. This is a good. Oh, this is a good move. What? I definitely seen it above 2. Has it been this long since above 2? That can't be right, is it? What? It never broke 2 in June? Whoa, okay. Then this is a meaningful move. For some reason I thought we had been above 2. I guess we were just real close to 2. Interesting. Okay, look at this. See, it was oversold. This is where, let's test this. That's the thing. When I'm using charts, I'm more just testing charts. I'm seeing if they work out, if they're really indicative of anything. So I'm going to watch natural gas now. We see the RSI, it got sold off, but it's been moving up. And this time when it came back down, it traded below 160 and it retested the support. Is that the word? Can you say retested the support? Yeah, right? And is that it? Retest? Rebreak? I forget. And then came back up, but it never got oversold again. Bounced right back. You see, you like to see this with companies or charts where it dips below and then bounces right back the next day or the next week. It's like, oh shit, okay. People were paying attention or they sold it too much when it went too low. Blah blah blah. Shit. So this is actually kind of meaningful. I think it doesn't even matter. It does matter, but I can't read the weather. When I see this, I think people are paying more attention to natural, like it's getting people's attention. That's what I think. Okay, so this is what I'll say about I should have said this. When I say there's been like a multi-year downtrend in natural gas, I mentioned this. And in prices declining and the stocks themselves are declining. What happens is people start curtailing production and they cut back on supply. And it ultimately results in they cut it too much. This is not always happens. It always tends to happen. That they cut too much, and then on the rebound, the prices they correct on the backside, and so with the case of natural gas in the equities in particular, it could be that production had been cut so much, and that now there's going to be so much increased demand, especially following the pandemic, that it might be that now we start hitting some capacity issues, and then natural gas prices could. I'm not forecasting that they'll skyrocket. I have no idea, but from what I could gather. It's been a number of weeks since I looked at it, but it looked like there was going to be some tight supply and demand coming in like about 6 months or so from now, 9 months, like just because oil prices plummeted too. You may know this, because oil prices plummeted. Natural gas is often a byproduct of oil production. So in the oil, when oil is traded below 0, natural gas prices are ultimately going to positively benefit from that, because there's going to be supply cuts on that front. So this was part of my thesis too, that I thought that lower oil prices, among a number of other things too, would ultimately result in higher natural gas prices, especially if the economy started bouncing back super strongly, and industrials are cranking and so forth. That maybe, and plus just the multi-year downtrend. You know what I mean? Like, this is the thing. I'm like piecing together a narrative in my head, like convincing myself this is why I'm buying something, and maybe I'm right. I have no idea, but like it's like investing. Is it investing 101 or it's investing 201? These downtrends, especially in commodity type industries, they turn around because we're humans. It's human nature, and so people forecast the prices are going to 0. Although they did in the case of oil, which is so funny, huh? But and then ultimately it goes too far, and then it bounces back on the back end. So you're always just trying to time, well, when is that bounce back going to happen? So this is the thing. Another thing I was looking at were these weekly charts for natural gas. When I was buying in March, I thought this might be a retest. So this is what I mean. The charts kind of played a role here too, and it did retest and it bounced back. And you might say, oh, well, the natural gas price didn't bounce back that much, and that's true. This is what I mean. What the hell do I know about natural gas prices? But the equity prices, they bounce like crazy, right? Now our RRC still a triple or almost a quadruple from those lows, right? Let's keep an eye on, if you can remember this chart. See, it bounced back. So that's another case where the charts played a role. So this is the thing. Now even natural gas prices are bouncing back. You might expect that the natural gas play. I'm using RRC as a proxy. Oh, look at this. It opened up too. It opened on a jump. That's bullish. So the books say. Okay. So, damn. Do I add? I just actually bought some more natural gas stuff in July, just because of prices. I thought this is the thing. I'll think things are cheap. But things are cheap for a while, and then they're going up, and you still want to keep buying them. So I was buying them in March, and then I bought them a couple times, and then July they're just doing nothing. I kind of bought them because they were doing nothing, and I didn't think the thesis had broken. So just time. Like I'm slow. I don't necessarily have a plan to average into it, but in my head I'll think, all right, if it just sticks around here, if it pulls back, if it stays flat, and the thesis hasn't broken, I'll buy more. So I bought some more in July. I bought some new companies in July too. So this is interesting. Now I gotta ask, I really get annoyed buying when things break out. I've noticed. So I'm kind of new to a couple years into technical analysis, and it really frustrates me when I buy and on the breakout, and then it pulls back. I get so pissed at that. Right? So it's so silly because I'm trying to get doubles and triples and stuff. So missing out by 5%, but it's almost like I feel like I'm falling victim to my biases and stuff. You're buying it because it's going up. So, But now, okay, but this is the thing. So let's do this. I'm gonna do. So if you saw the other video, I got this buy list right here. Here we go. This was the point. Oh shit. So, hopefully these streams force me to stay on top of this. Sandridge. Yeah, Sandridge was one that. Do I have it in Roaring Kitty Book? Oh, it's. Actually, can I just see? I just want to see if I own Sandridge. Oh, sorry. I hate scrolling. Sorry. If the experience sucks because I'm scrolling, let me know, because that's always been my fail. All right, let me just see if I. Oh, I do own it. I do own it in this portfolio. This is good because I wanna. This might be one. Look at this, 57 million market cap. It was. I felt it was kind of sketchy, and that it might not survive. That's all I mean. But then as like the natural gas thesis seems like it's working out. Like I kind of wish I bought. Wait, what's this chart doing on? To start doing an SD. Yeah, so SD is a good example of, I guess this is the one that I had on my mind. It was like flatlining. Look at this chart. And again, the thesis I felt was still intact. And it was like, again, you're seeing similar charts across all these natural gas players, right? But in the case of SD, I have to dig, I don't feel like digging into the fundamentals right now, but I will. Oh, look at it. See, this is a big move. So it was like just flatlining here, and I kind of felt the thesis was still intact, as it's still intact as indicated by my still heavy positions in RRC and some other companies as well. So I'm like, you know what? Let me just buy some of the more speculative companies where, if I'm right about the natural gas thesis, then these ones are going to go up significantly as well. Obviously, I wish I bought them down here. But what's interesting about Sandridge, just as an example, is like it's only doubled. It's only doubled from the low. It wasn't even a double. It was only up like 50% roughly or something like that. I calculated up like, is that all it did? Obviously the fundamentals, right? I'm a fundamentals guy, but I see stuff like this, like that's it. It's only up 50% or something. And so I bought more of that. So it's turning out to be really good timing on that front. But we'll see. So this is, I mean, they're all going to be up today because natural gas is up, right? But now time to, so let me just go back here. Sorry, what I wanted to do, we want to add this to my track list, to my companies that I might be adding to. So I had SD there. I added that, and then I ended up adding to the position. Is RRC here? Yeah, so let me just add some here. So this is good. It might even be in my sell list. So I'm going to add a couple. I'm going to add RRC, and I might want to add, is AR here? Yes, ARC. So I had, so you can see. So, this is good. I forgot I did this. I lose track of so much. I'm just, look Look at all these tabs. Look at all these tabs I have open, huh? Like, this is why I'm losing track of everything. Plus, what are you doing research with the beer for, huh? I say I'm trying to retain this stuff. This ain't helping. But this is the thing. If you saw my other videos, it's hard to be on top of so many positions right now. I expect the position count to drop, but so this is supposed to help me. This is a tool that if I pay attention to, it helps. And so, yeah, I'll keep an eye on natural gas now. So we already have a success today, right? Something that caught my RFP we looked at, RRC, and I mean natural gas generally, and that's looking interesting. And so what I would do too, I mean, is there any commentary? So as you may have seen, is there any new articles or any of these? Let's check RRC. There's some good posts on some of these. So this is I've been fortunate that I don't stand alone in my thesis for natural gas because other people share it. And there's been some good articles, not just RRC, but a whole bunch of these companies of people saying similar things. I like to see that when I think the person's reasonable because I feel like, okay, man, when you're an individual investor, it gets lonely because, especially, I don't want to use the word contrarian because it's so cliche these days, but when you have an opinion that's really against the masses and no one's really talking about it, it gets lonely and you're like, oh, maybe I'm just crazy. I don't know. So I'm always encouraged when I see other people posting about it. And if I know because I've tracked them for a while, as you see my spreadsheet's called Tracker, and if you see my videos, you know I'm big on tracking. If I'm tracking so much stuff and I'm tracking an author in particular, and I know they've been reasonable in the past about other companies, then when I see them share an opinion on a new company that I'm tracking, I'm like, yes, all right, yes, they share my view on this. And maybe we're still wrong sometimes, but all else equal, I like to see it. So so maybe I'll check. So neutral. Do I know these people? I've seen Courage and Conviction Investing. Read some of his article. That one's from June though. I was checking to see if there's anything new. Oh, did RRC report? Oh, did RRC report after hours? Reports higher production but big drops in realized prices. Oh, was this today? 5:43. After hours, posting a smaller than forecast. Oh, so they report. See that? So I'm not good. I'm not keeping track of these types of plays. They're multi-year, right? I'm not keeping track of the quarterly. Sometimes I am. If I'm, like I said, if I'm really dialed in, I'm really tracking every quarterly release very closely. I'm not so much for RRC because it's more of a longer-term thesis. I'm diversified across a number of players. But oh, bummer. Is it gonna? Did it sell off after hours? Rain says it remains on track to spend at or below. 3%. Noise. It was up 12% today. Well, I mean, after hours, don't put too much stock into after hours. Maybe you already know this, but it could be like 100 shares traded. Even if it's a couple thousand, who gives a shit? It's the next day. That's really what matters. So we'll see. And look, this is noise. So I probably will check out that. Oh, can I do that now? Do I have it up? Where's RRC? Oh, how is this sorted? I don't even know how this is sorted. But I should probably check this out. I could check out the press release, just see what they say, just super quick. I don't want to get into reading too many earnings releases just because I don't feel like it right now. Let's read those quotes. Let's see what he says. Range continued to make steady progress in the second quarter, significantly improved our cost structure, operating savings. Yep. Sale of our North Louisiana assets, cost structure, capital productivity. 2020 expect Range to reduce total debt. They've been actively paying down debt. Range remains well positioned to successfully navigate. Yeah, okay. Not much there. Any financial at the end of the second quarter, so $630 million drawn, $1.4 billion of additional capacity. I expected to exceed. Repurchased and retired $47 million in principal amount of its senior debt. They haven't been going crazy. They repurchased 200,000 shares. That's noise. I mean, it's better than nothing. Has repurchased $360 million in debt principal at a discount. I don't know what the discount is. I'd be curious about that. In shares since the second half of 2019. So, all right. So, any opinions on natural gas there? Full year guidance. What are they guiding anything? I don't know. Anything noteworthy? I guess not. All right. It's more of a prior guidance. Yeah, all right. Okay. So something to keep my eye on. All right. Can I close out of some of this stuff? Maybe oh, there was you know what? I don't know if there's any stocks you're interested in, but there's a new article posted on Gamestop today. And since I'm going to roll out that updated, let's just see if I, transition from physical sales to digital sales is not occurring as fast as the market thinks. All right, so now this is a good example of I will read this. I will read this with with a fine tooth comb. I'm going to pick apart this because I feel I am dialed into GameStop for better or worse. And did it say it was neutral? Neutral. There are multiple reasons. Rational. Has he posted on GameStop before? Yeah. Yep. Are doomed to fail. I remember the name. Was it Vink? Fink? Yeah, Vink. I remember the name. I didn't remember he was bearish though. Was he bearish there? Oh, he's neutral. What? They're doomed to failure and then he's neutral? I mean, that's possible. It's no problem. Hey, well, it's down 24% since then. So this too. So I'd reread his old report from May 4th. But now he's saying he may be right, but still neutral. Yeah, Barry. Now it's all right. So this is. I've been working on this new GameStop video, so I'm really dialed into all the latest stuff. And I mean, I mentioned Barry in the video. Tune in. I think I'm gonna try to finish it tonight after I do this stream. I got to do some more editing. If you saw the other videos, my videos are all too long, so I'm doing a lot of editing of it. It's taken me some time. I'm also trying to learn Final Cut, and but I mentioned Barry here, and so here's the thing. I believe they'll have the cash flow. He said that in Barron's 2019. Oh yeah, I forgot he mentioned stuff in Barron's. I should have mentioned that in my video, but that's okay. Everything's styled. Everything's covered in his letters to the board and so forth. But so he says this. I believe they'll have the cash flow. I mean, I agree with that, as will be clear. Well, it's already clear, hopefully, in my other video. But that video is so damn long, you may not have watched it. But in my new video, they're gonna have the cash flow. But what everyone's waiting for is for the sentiment to change. You know, first of all, if it will change, right? I strongly believe that it will. Oh, if you haven't seen my other, if you did see the other video, GameStop is now the top position in the portfolio. It's twice as large as the next one, so this is why I'm kind of interested in with all that's going on here. Much higher share price, but we're just waiting for sentiment to change. So there's a question of will it ever, because what they need to kind of change, the management needs to change the narrative so that not everyone thinks that it's a dead business model, which it could be, but it has opportunity to transform itself. I will elaborate on why you may be right. What's the most prevalent bearish case? Is overestimated by some. Agreed. Believe the market and most investors are overstating the speed of this transition. Agreed. That's why the cigar butt. In my latest video, I say it's a little bit different than a cigar butt. It's a little bit different because it's not a horse and buggy industry, which not every cigar butt investment is. But the backdrop is gaming, a thriving gaming industry. It's a $150 billion industry, and we expect GameStop business will perk up during 2020 and 2021. Yep. But the question is, yeah, when will the sentiment turn? If it will turn, because value wins out. Value wins out. That's why I'm a value investor. And Barry was too early on GameStop. I turned out to be too early on GameStop. That it's tradable. It was tradable. I was adding that you'll see in the. I forget did I mention the previous video? I forget, but I was adding in July. It's trading below $4 in July 2020. I mean, I think it's going to be turned around. But the question is just how much would it turn? How much will sentiment shift? When will it happen? Before diving into the thesis, I want to address GameStop's business model. Great idea. The 2018 annual report was a great idea to stop reporting gross profits split by 2018. GameStop's gross profit was derived from reselling pre-owned video game. All right, so they're breaking up, blah, blah, blah. Yep. He's just reporting data. Okay, the idea of GameStop's decades-old business model is simple. Right now, I mean, I'll reread this later, probably early in the morning. I'll read things a couple times. Right now, I'm just looking through. I'm just trying to get a gist of it. Is there something new in here? Because I think it's a longer article, a little bit relatively. It's not that long of an article, but it's on the longer side. I'm not going to sit here and read the whole damn thing. Sorry for all the scrolling. The digitization of video games has clearly been an issue. GameStop's hardware sales have been strong over the last few years, while pre-owned game sales fell off a cliff. Yep. Nintendo's. I suspect this is right. Yep, digitization. Now I want to elaborate why I believe digitization video gaming, especially the video game, is slower than most think. It is. What data? So right now I'm just curious, what data is he using to support this argument? Because it is overblown, and it is going slower than people think. Has cut into GameStop's lucrative pre-owned business model. The transition is much slower. Yep. Compared to its peers, includes the risk of mobile. Yep, risk of mobile. So it's the risk of mobile gaming, PC gaming. Yep. All right, good points. It's also there's fewer games out there because it's more blockbuster games. They've kind of transitioned a bit to like bigger games. Then you can purchase stuff within the games, so that results in fewer used games that are sold by GameStop. Compile data from Sony's. All right, that's a good idea. Relying on Sony's numbers. Is this physical, digital? 18% for Sony's what? So much for relevance. However, the console video games, especially pre-owned, still drive. Yep. So the used games for GameStop generate much more free cash flow for the company. So that's the big thing. So if everything's going digital, it's going to be fewer used games. Although I heard an interesting. You'll see this in my new GameStop video, mentioning that there could be like an online version of a used marketplace for digital video games. Like what would that look like, where like GameStop could serve as a clearinghouse of sorts for used digital games? Obviously but the thinking being there is no there's no residual value for digital games right now, so you're kind of creating a market but then at least consumers would be happy about that right now, because when they're done playing the digital video game, they get nothing back if they don't want it. Right now it just sits on your console, but it's eating up inventory, it's eating up space on your console. So if that were an issue for you, wouldn't it be great if you could just get something out of it? So I thought that was kind of interesting. I didn't think about that because it seems like that's not realistic, but I'm not smart enough. I don't know. It could be a possibility. So this is the thing. This is why I like to read other people's views, because they might mention something that I didn't think about. I definitely didn't think about that. But imagine GameStop kind of serving as the clearinghouse for these digital games, like the hub for all the different consoles, all the different digital games. We'd be years away from that if it were even possible. Nevertheless, something to think about. Sony releases the full game software digital download ratio of all PS4. Yep, clear state is much more accurate. So wait, what is this graphic? Satisa. Oh, this is the Satisa. Oh, so I originally mentioned this in my video. I think there's a lot of speculation that physical is dead. No one wants physical discs anymore. And if you Google, let's do it right now. Let's say physical versus digital games, video games. Let's see. Is it number one? It's up here. Whatever I searched before, I don't remember what it was. Satisa was like the number 1 or number 2 result. And if you click it, you see, I believe this is the chart he got. Yes, nailed it. Because I was just looking at this yesterday and today. But I think this has kind of contributed to the negative sentiment, because this is what people see. They see this chart and they go, oh shit, physical is only 17%, and look how rapidly it fell over the past 10 years. But I believe it's inaccurate. It's very difficult to prove. This is with any data source that you're looking at. And like, how can I possibly know? If you read through this, it appears as though they're including downloadable content, like within games, number of games downloaded. I think do they mention it here? In downloadable content. So that's the thing, that it includes downloadable content. It's not so much the initial purchase of games, which is meaningful. That's a meaningful distinction to make, and this doesn't. But because it's one of the top results on Google, this is how powerful Google is, right? I mean, you can control. I don't mean control. I just mean you have power over what that top result is, and maybe there's a good reason it's the top result, right? But I'm just saying, if this data weren't painting an accurate picture, right? But it still was the top result and people are coming across it, people are getting the wrong idea. There's plenty of other reasons to be bearish on GameStop. I'm not saying it's only this chart, but I've seen it mentioned a number of times. And then when so many people talk about it, I think it weighs on sentiment. And the GameStop sentiment is so damn heavy. And so I was trying to piece it. There's many reasons it's negative sentiment is so heavy. And check out the video when I roll it out. It's because I get into it, but it's still really heavy sentiment, and I think stuff like this contributes to it. So I'm glad he included this chart, because I ended up whacking it from my video. I was trying to make it way shorter. I think I might get it down to 20 minutes or so. And so I just cut this. I think I cut it. I'm losing track. Okay, good. So then he used Sony Oh wait, so this is already I like this article. This I already like this for this one point alone. I'm not even sure what the rest of the article is going to go. What the rest of it's going to look like, but this is good. Clearly, this data is much more accurate since they do not include. Okay. Clearly, this data is much more accurate since they do not include irrelevant mobile or PC gaming sales. Instead, it concentrates on the console market. Yep. Not irrelevant. I know what he means. I mean, the mobile and PC gaming sales are certainly relevant, but I get what he doesn't mean. He means relevant to this discussion that we're having right now. But for the GameStop thesis that people are transitioning to that stuff, it's relevant. But this is what I mean. It's a good idea to do as much as you can to try to separate the figures. So this is a good idea. PS4 full game software download ratio over 60%. So, and I think Q4 for Sony was Q1. It ended March 31st. Yes. So, pandemic, right? Pandemic. Okay, so this is naturally going to rise, but it's still interesting. So it was still, it's not that much higher. I would have thought it was going to be higher. So if it was already above 50%, oh, that's interesting. So it was only 50. Oh, it was, Q4. Oh, what, even last Q4 last year, it still wasn't even 50%. And then it was, okay, so it was a bit of a leap, 45 to 65%, but you expect it. But then then there's a question of, okay, so it bumps up, right? But then do those people, does it get sticky? Do people stick to that digital download? Once they've made the transition, is that it? Or do they go back to physical? That's an important discussion to be had, because I suspect that some of these people who make this leap in this Q4, that's it. They're not going back to discs. So it may have accelerated things. But it's 65%. It's a big chunk, but the consoles are coming out in a couple of months. It's not 100%, so this is why the GameStop thesis holds water, because it's likely there'll still be demand for the products that GameStop sells for at least a couple of years. Just buy their games, rational consideration over. So Q4, yeah. Okay, I read this. Expect that the bears think digitization is far further. Yep, I conclude that customers do not necessarily prefer digital games over physical games. Actually, they seem to prefer. Well, I don't think that's true. So why would customers buy physical games for console? Wait, I conclude that customers do not necessarily prefer digital games over physical games. Why do you conclude that? Q2 did account for only 28% of all PS4 games. Yeah, okay, that was cute. That was almost 2 years ago. Oh, 1.5 years ago. I mean, how do you make this statement? So I conclude that customers do not necessarily prefer digital games over physical games. Actually, they prefer. Some do. Some do. As I mentioned this in my video, there's certainly plenty do. My family and friends do not. Many people do not. I think this is. Well, let's keep going. I mean, I'm a GameStop bull, so that I'm like, oh yeah, that's great, right? But I try to be very objective with my analysis, especially when it comes to a position that I'm really dialed into, and it's a large position, because you can't suffer from confirmation bias. You need to avoid that at all costs, and I'm like hyper attentive to that stuff because it's being a value investor is lonely, right? You really need to be. It's like you're in a perpetual state of introspection, right? You're constantly thinking about what you're thinking about, and are you overthinking stuff or underthinking stuff, and it's so difficult. And that's why I'm hoping with this stream, like it can be a conversation about that stuff. Multiple reasons why people prefer physical games. So like statements like this, what does that mean? There are multiple reasons why people prefer physical games. Why some people. There are multiple reasons. Yes, okay, there's multiple reasons. First, material less. Yep, okay. Generally, no probably they're cheaper. Yeah, but that's just because that could change. Able to sell the physical copy again, right? Resale value, of course. Disk space, of course. Speed of one's internet, of course. Okay, these reasons should not be underestimated by investors. So, yep, all that's true. I believe the number of digital sales relative depends on the game genre and game size. Sure. So these are good thoughts. These are good thoughts, but I'm just so dialed into the company. It's nothing new for me. There's nothing. It's like, all right, this is the case. In the market, I speculate that investors know a lot of this as well. I think like maybe some individual investors are kind of thrown off by Statista and stuff, and that contributes to the negative sentiment because they might be talking about it on social media and then word spreads and stuff. But as far as the, I don't know, because I don't know. I think there are times where the institutions are pretty dumb. But I just think there's more to the narrative than these are important points to make. And but I'm just saying I don't think the market gives a shit that much about it. They need to see a business change. But I think the market this. Well, I mean, again, I'm long GameStop, but could they be this like? Could they be this wrong about GameStop? It's one of the most unique plays I've come across. And you see that, I mean, I look at a lot of stocks, but that we're still under $4 in July has really thrown me for a loop. We're pretty damn close to the consoles, and these things take time. It takes time to generate free cash flow, but usually, the market is ahead of everything. And I do think it's very, very likely GameStop's going to generate quite a bit of free cash flow looking out 2 years. I don't think it's... when you're writing a thesis, you kind of need to defend your thesis. You need to approach it a certain way. But like I mean, I do think they're going to generate plenty of free cash flow, and because I think it's inevitable that that's going to be reflected in the stock price. It's just a question of how quickly and how high it's going to go. I already said that, but like this one, I mean, it's still July, it's still August, and it's still priced where it is. Is it going to be the market needs to see a change in narrative where GameStop actually talks about a long-term future, or is it just one of those classic value plays? Is it just a classic value play where the sentiment, if it were a classic value play, I thought it would have turned, but here we are still July and August. Like this stuff happens where it just remains undervalued, and then seemingly overnight it just gets repriced correctly. But so many eyeballs are on this, and the short interest is so damn heavy. What is it? High short squeeze? What is it? Short squeeze? Short interest. Oh, first of all, Market Watch, GameStop. Oh, I think I had that as a shortcut too. This is where you can get the latest. I do Market Watch because it seems they update their short interest a couple days earlier than Yahoo. 53 million in the float. I think the float's less than this because if you include the major shareholders, you're down to like in the 40 million. So this is what I mean. So this is what I mean. Like it wouldn't be so uncommon in a smaller company where not so many people are following it. It's kind of par for the course, not par for the course, but things can remain undervalued for a long time and then it gets corrected in short order. But GameStop, there's so many eyeballs on this damn thing. It's so heavily shorted and so I don't. There's a lot of people talking about it, but I don't know. Maybe not the big people are talking about it. Like as we get closer to the consoles, I think more and more people are going to be talking about GameStop. And maybe that will get that sentiment change. Like, oh shit, how are we gonna play the console? It's one of the. I feel like it's a big moment in 2020. Like it's a catalyst that people are checking out. And so how can I play this? And GameStop's one of the few pure plays. And so maybe just getting closer to it. But that's the thing, we're real close to it now, and it's still at $4. So, but maybe it could happen overnight. I don't know. I'm going off on tangents now. Sorry, I'm just gonna clean out some of these because I'm losing track. Oh damn, Matador. Oh, I've just reminded myself of Matador. Anyway, yeah, sorry, just quickly, I just want to check this out again. 53 million. Can I do this real quick? Do I have, if you don't mind? I haven't done this. So my game, how much I'm going to spend on GameStop. It's not the short interest has never been a major part of my thesis personally. I know Burry talked about it and stuff. And with such heavy short interest, it tends to be more volume. It could increase the chances you could buy back shares without impacting the price too much. But like a short squeeze, I don't even know if I don't know if GameStop stock price is going to squeeze. This is the thing. So I don't know how relevant the short interest is. But like as I see how it's unfolding, I think if something, doesn't this seem like the kind of setup where it could squeeze? The one big difference is it's not that leveraged. GameStop's not that leveraged. Like usually with true bona fide short squeezes, in my experience, not always, but many times, like you kind of saw it with Rite Aid. Do I not have that? Sorry. Would we classify this as a short squeeze? Yeah, look at this. There's definitely a little bit of a short squeeze. 7, and then it was at like 21. And was that a week? Look at that. When you get 3x, and it's a bigger company too. Its presence is gigantic, but even the market cap. What's the market cap? Yeah, so even now is that half that 400 million. It's like a GameStop. It's even bigger than GameStop was, and I mean. Tesla's probably a short squeeze. There's a bunch of them out there. But like a Rite Aid, for example, and I suppose a Tesla, but Rite Aid, like super leveraged company. So what happens is it's so heavily shorted, it's because people are pricing in bankruptcy. They think it's going to go bankrupt. And then when they realize it's not going bankrupt, then it's like the market's trying to correct itself. In the case of GameStop, I mean, some people are speculating that GameStop's going bankrupt, and I think that's ludicrous. No, I don't think you're gonna come across anyone who's saying GameStop's going bankrupt and they're gonna defend their thesis, because there's no, what data do you have? Show me your data that shows GameStop's going bankrupt in the next 12 months or 18 months. And that's the thing. Or Rite Aid was maybe on the brink. I wasn't that dialed into Rite Aid. I'm not really sure, to be honest. But with GameStop, there's some people who think that, but it's more people think the secular risks are just too much, in that the terminal value is 0, and but still, it's still even priced cheaply on that, because I still expect that, but they're still going to generate some free cash flows. Going all over the place. Anyway, but still, I still like to take note of this, because I'm like, shit, could this set up? So 53 million short interest, and then if you add these up. Get your graphing calculator. I don't care about the big, like, these are the ones loaning out the shares. I don't care about BlackRock, FMR, Dimensional, and is GameStop even in some indexes? Probably. I mean, who knows anymore? But Hesta, okay, so Hesta, what are they? They own like 7 point. I'm gonna combine. I think this is a little bit off. They don't own 11%. They own like 7%. So I'm just gonna take their shares. 4.7. No, I want to say it's like, I think they own like 5 million. 5 million plus Maverick. Who's Maverick? They bought in a couple months ago. Oh, it wasn't a 13D. Oh, but they own 5%. So that's the thing. It's good when they own 5%, because then you can keep an eye on them. You can see this with Barry. He was above 5%, but then below 5%. But then he published his latest commentary on the company, which was they were talking about the board vote, and he still owned 4%. So 5 million. Has to permit. I'm going to count Maverick because they're 5%, and they're, I think I did look them up. I thought they were a value investor of sorts. A long short equity fund. Are they not are they not value investors? Because when I see someone's a value investor, it doesn't mean they're always good, but it means they're on the right track, right? And they're also they might be talking to Hesta and Permit and Burry, and is that all that? So it's a hedge fund. Okay, but not much. Bummer. What do we got here? What's the wiki say? Ooh, it's a Tiger Cub? Oh, it's a Tiger Cub. I've been around since 93? Oh shit. Okay. I don't think I did look this up last time. How did I probably just went to the website and then didn't see much. What? Is they have 15 billion in assets? 13% annually. That's not bad. I mean, it's not terrific, but it's not bad for. If they have 15 billion in assets, that's legit. Oh, through 2014. I mean, that's what did you do the past 5 years? You know what I mean? Like primarily so stocks. Okay, so this sorry, I need to read this because I who was in 1993 Lee Ansley, who was just 28 at the time, and a Tiger Cub ever approached. Is Lee still here? Is the head of hedge fund Maverick? He is a valiant. Oh, boom! Did I see this? Maybe I did see it, and I don't remember it. I thought they were value investors. He is a value investor that is particularly known for investments in the technology. Oh, so if he's in the technology sector, he probably. Wait, is I don't even know. Is Lee? I mean, I don't know who Lee. There's particularly known for his investment in the technology sector. So is Lee is he interested in like past 5 years or in like tech stocks and stuff? Because like Microsoft. 30%. Okay. Prime stocks, they mentioned it's quite frustrating as a shareholder that companies are not using cash more productively. Hey, does that sound familiar? It's frustrating as a shareholder that companies are not using cash more productively for their shareholders, whether buying back bond or stuff by issuing dividends. Oh, okay. Well, that's a little bit different than me. 2006, Lee mentioned it's quite frustrating as a a traditional fund puts a greater premium on the value of its relationships, blah, 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 blah. It started to diversify. Shit. Okay. Okay. Okay, so value investor. So I don't know Maverick. I don't know what their play is, but they're a hedge fund. They own in like I mean, risky stocks if they're dealing on GameStop. There's still risk with GameStop, even though it's a high conviction play. But they're on the same page, so they may not be selling out too. This is what I mean. What I'm trying to calculate now is if I'm trying to calculate like an adjusted float, I would incorporate Hester Permit. They own about 5 million shares. Maverick owns 3.8. Then you got ignore State Street, but Donald Foss, didn't he found one of those? He founded a company. He just seems. What was it? Was it a real estate company? A tech real estate? Oh, jeez. Donald Foss. He's a billionaire, I believe. Is he a billionaire? Yeah, Credit Acceptance Corp. Businessman, billionaire. All right, so I don't really know his background with the plays like this, but I'm including him as he won't be selling anytime soon. 3.5. Then Must Asset Management. I think that's a Korean firm that they too, I believe, are value investors. Now, I think I said this before. But these are like hedge fund value investors, which is a little bit different. If you're just like a mutual fund value investor, I see so many we're value investors, and I look into their holdings and their performance and stuff. And for some people, that's just a marketing thing. They're just trying to market themselves. Oh, we're like Buffett, blah blah blah. It doesn't mean much. But when I see a hedge fund classifying themselves as a value investor, it's not really popular these days. So if you're willing to stick your neck out like that and call yourself a value, you are probably a legitimate value investor. I think Must is. Let me see. Was it Korean? Kind of forget. So, but it gets all right. So there's legitimate value hedge funds who think this. It could be they're duds. I mean no disrespect to these funds. It could be that they're just dud funds, but I've never heard of them before, which gets my attention because many times I've heard someone be like, I don't really know what their plan is or how they. Let's see. At a glance. Nope, that's not helpful. At a glance, maybe. Board of Directors, Company Information, Hedge Fund, South Korea. All right, Korea. Seoul. I knew it was Korean, but what's the style? Sorry. What doesn't it say like your fund? What's the fund? Talk about value? Wise investments. You got a philosophy or something? All right. Well, I don't want to spend too much time on this. I'm just trying to must hold. Do they disclose their holdings? All right. So this is kind of messy. I'm not getting a clean read on it. I don't really know. I can't get a clean read. I don't know what to make of it. Sorry. I know I'm clicking all around. But they took a position the past couple. Yeah, was it in March? It was 13G. But I'm going to group them into. And this is the thing. So they still own 5% right now. They're in it. You know what I mean? Like this now months. I remember when they first filed. I'm like, all right, let's just keep an eye on this. See if they sell out. See if it's just a short-term play because the market was selling off. We got it ASAP because it was a 5% position. But Maverick, they filed May 15th, but they had a 5% position. How's that? Maybe they took it right at the end of the quarter. They may have. They probably did. GameStop sold off right at the end of the quarter. Did they? But did GameStop? Yeah. How'd they get away with not filing the 13G? You know what I mean? They had a 5% position at March 31st. How did they not have to file a 13G? It doesn't matter. 3.5. Oh man, I don't know how boring this is. I'm actually just calculating these things. Must 3.3. Permit. I'm not going to count that in Scion. Is there one more? No, that's all. Okay, so 15. Is that right? I'm missing one. 15 million. And then I think Sherman owns 1 million. So there's another. Is that right? I feel like I'm missing 5, 3.8, 3.5, 2.8, 5. All right. 3.5. Oh, I didn't add Must. All right. So yeah, we got over 20 million. So 65 minus 20. So they're under 44. I've got low 40s. It doesn't matter. I know I'm wasting time there. It's low 40s. in short interest 53. So this is what I mean. If these value, this is the thing. This is why it's important that they're value investors, because if they're value investors, they see the value, right? But if they see the value that I'm seeing, then they understand that it's worth quite a bit more, if we're right, than the current market cap, and that means that they might not be selling out right away if on our price, on a rise in the price. And so how do you close? I mean, you can close the position. It's okay to have a short interest that's above the float because, not like. The same share can be sold and bought multiple times, right? But it's just, it makes it more difficult when there's fewer shares out there that can be traded. So I don't know. So my thing is, I have no idea whether or not a short squeeze is possible. It doesn't matter. It doesn't matter. It's just something I at least pay attention to because it's a learning opportunity for me. I've never really dealt in too many short squeezes, and I don't really know the typical attributes of them, except I feel like they're usually more levered companies. And but I've never seen a company with short interest this large in a company too. So I'm out of my element. Oh, and can I, while we're here, while I have this open, can I just check GME's bond prices? Sorry, now we're on a GME tangent now, huh? But this is okay. This one's okay. So you see, they tried it. Oh, they're above 100. Oh no, that's the 2019 ones. Oh, where are the new ones? These are the new ones. They traded at night. Look, they're still trading. Oh, these are rising. But they traded at a discount. I was talking about buying back bonds and stuff. It sure would be nice if GameStop could buy back these bonds at a discount. But I think if they tried to buy them in size, the discount would evaporate. It would vanish. I mean, but look, it sold down in the 70s. Jeez, crazy. And then I just want to see is there any volume today? There had been a little bit of volume, 1 million plus, 5,000. Not much. If they are buying back, it's small. It's supposed to be doing allegedly doing a sale leaseback transaction. I saw it was pulled from the online website too, so maybe they've done it. I think you need to disclose it within, is it like 4 days or something when you do a material asset sale? I don't know. We'll get the news when we get the news. Okay, so that was a long way of. I don't even remember where I was. Bummer. Okay, so this is in, so 65%. That really seems possible. You saw an incredible low digital. God of War was a massively successful single player campaign. So right, so this industry is volatile too because when the game's coming out. So this is actually a part of the reason too. I think there's going to be pent up demand for this console cycle because they announced it a year earlier than they usually do, and so I think consumers and game publishers have pumped the brakes. Everyone's kind of waiting for it. And so I think that this is especially, I mean, GameStop is getting especially crushed right now, right? It's really only happened like the past 2 years, the past 18 months. And but I think there's going to be more games that are released alongside the actual consoles. I think I counted over 40, which is twice as much as the number of games that were released last cycle. So I think there's going to be a big couple of quarters for GameStop in years anyway. I believe that's, but anyway, I'm just getting at that. He's right that these could be volatile, even not just sales, but also digital downloads, because there could be just in one quarter a major digital game that was super popular. I believe that promotions. Yep. Take Two. So I'll read that later. I don't really want to read all through this right now. Amazon. Yep. The future. Okay, so this one's important. That's why Sony will sell. Yeah, so right, there clearly is customer interest physical. It's why Sony will sell both the console with and without. Right, so that's. It's like GameStop's going bankrupt. No one buys discs anymore. I'm like, do you not see what Sony and Microsoft are doing? There's literally a quote from Phil Spencer. Phil Spencer, Xbox millions discs, something like. Can I get this first try? Yes. Look at this title. Oh, sure. Xbox is Phil Spencer. Our next console will have a disc drive. Microsoft Game Boss says that millions of people sell physicals. No one buys physical discs. Okay, I think I already said my family and friends they're buying they're digital. So that goes both ways, right? Sometimes people ask their family and friends what they do, and they'll infer that everyone else is doing that as well. In this case, it's kind of the opposite. Or I'm trying to assess whether my family and friends are representative of the mass, not so much the masses, but kind of the masses, you know. And in this case, I think they're a little bit different. But they'll eventually we're going in that direction. But I'm just talking about the next couple of years. But anyway, things like this. So I always use this one as an example. But he brings up Sony here, which is good. Yeah, right. They're going to have it. There's a reason they're going to have it. Xbox Series also comes with a disc drive. Blah blah blah. Want to lose significant market share, right? Gamestop one collectibles. Collectibles. I don't care about that argument. Historic EBITDA. Historic EBITDA for an entire year. What's this? GameStop's historic EBITDA. Right. I was looking at and you'll see in the video. Oh, do I have GameStop up? Excuse me. So check this. So simple free cash flow. Do I have it defined here for you? Yeah. So simple free. I call it simple free cash flow just so I can just. Oh, I got to stay on it. Operating cash flow less capex, and if you look at GameStop, like the first 3 years of the previous console cycle. Is this right? Oh, 3-year average. That was what I wanted. Oh, this is lower than I thought it was. Oh, I thought it was more than this. Am I getting a different result here? That's interesting. Regardless. All right, let's assume. Oh, this is right. Yes. Oh, I had to adjust this. I'm sorry. So this is I don't know if you've seen my other video. I have a little automated calculator here that if a company, I'll talk about this. I talk about it in the video too, but who the hell? No one's watching a damn 2-hour video, right? And so right now you see GameStop shares outstanding 64 million. That's how many shares, 64, 65 million roughly. But what I have this calculator do is if a company appears levered based on a couple of basic metrics, I don't even remember what they are. It doesn't matter right now. But if it says this company's levered, then this calculator tries to calculate what an adjusted share count would be if the company issued an adequate number of shares to right size, to delever, you know what I mean? So that it's not quite as levered to a variable that I select here. And so what I say is, in this case, what do I have selected? 2. So it says, all right, issue enough shares. I think you issue it at a 20% discount. So if the price right now is $4.14, it says take 80% of that. Because if you were to issue shares, it's unlikely you, especially with a risky stock like GameStop, you wouldn't get market price. They would have to discount it, I think. Maybe 20% isn't enough too. Maybe it should be more. Regardless. So issue enough shares so that your net common overhang, if you remember net common overhang right here, long-term liabilities plus short-term debt minus excess cash and short-term investments. If I issue enough shares to get it to 30%. So it does this. Or the other one is operating cash flow 3-year average divided by net common overhang, get it down to 20%, whatever it is. I can adjust these. And so then it does issue enough shares. So in this case, because GameStop's classified as levered, because of those damn leases, this is more an issue with share radar data. They need to separate those leases, because if the leases were separated, then it wouldn't be classified as debt in here. And I have no way of untangling it. At the very least, they should be separated so that the user can adjust whether or not they should be classified as leases. But I have no recourse right now. I can't undo it. Anyway, so this is my number's looking a little bit different because I just was looking at this earlier today when I was making the video. And so I had to adjust this. Right now it's using an 84 million share count, but it shouldn't because GameStop's not levered. But what should happen is, like, I have this. It says, is the company safe? So if I say true, it's supposed to unwind all the calculations. But for some reason it wasn't working. It's not working here too, so something broke. But this was supposed to be my fix. I just clicked true, and it undoes the calculation. But anyways, I already have it open here. Do I have it here? No, not this one. Oh, this one right here. Sorry about that. Is it here? Come on. Yeah. Oh, is it broken right now? Oh. Can I do a refresh? All right, I won't do it right now. But anyway, the free cash flow per share. Oh, okay, I got it. Sometimes I just need to refresh really quickly. I know this hurts the experience in the stream. There's nothing I can do. This is I mentioned this in the other videos too. Like this is as good as I could do with the spreadsheets. This really should be in a program where you don't have these stupid errors, but I'm at the mercy of this, and this is as good as I get it. Sometimes it's going to break. Sometimes we're not going to get the insider buying in my, like right here, I have insider buying. This is sick. If you saw the other insider buying, it's less relevant for GameStop because it has so many moving parts. But anyway, so here we go. It still says 84. All right. Oh, because you know what it does? It fixes itself after it doesn't matter. So if we looked at the simple free cash flow for the first 3 years, it's if we fix the share counts. If I just change this to 65, watch this. Maybe that'll just it'll be a quick fix, huh? It doesn't need to be automated. And I go down to simple free cash flow here. It will correct. And then we see, oh, it's oh, so I see that you're not getting a smooth streaming because I'm refreshing and it's eating up. Oh, let me close some of the. Do I want to close? I think when I'm calling data like this, I think it's eating up some of my bandwidth. Let me close some things here. Sorry about that. So I'll have to be careful maybe opening up so many spreadsheets. I'm not so sure. All right, but anyway, if we go to Gamestop here. Damn, is it still going slow? Sorry about that. I'm still getting the alert here. I'm just checking. Poor? What? That's a bummer. Hey, let me know. But if you get to simple free cash flow, and I went back to 84, right? Because I went back to the spreadsheet. But it looks about, they're like $6 per share in free cash flow, right? Versus on average per year, $6 per share on average. The stock price right now is $4, right? And so I mean, it only needs to be a fraction of what they did. Last cycle is not necessarily what they'll get this cycle. I'm not saying that. That's forecasting 101. But oh, bummer. Let me try to close a couple more. So I get the, all right, let me just keep this open. Let me close out of some stuff. I wonder if opening this many things is going to be an issue. I'll have to keep my eye on that. Oh, maybe I want this one open. There it is. There it is. All right, let me just undo whatever it is I did. I probably must have did it in a different spreadsheet. So here we see that $6 per share in 2016. Excuse me, this is the simple free cash flow 3-year average. So it takes the simple free cash flow for the past 3 years, and then it takes a simple free cash flow in each of the past 3 years, it averages a simple arithmetic average, divides it by today's share count, which is 65 million, and you get $6 per share. And that's where, so GameStop's trading at like a 60% of that simple free cash flow that it got. And again, it's not going to necessarily generate this much free cash these first 3 years of the console refresh, but nevertheless, if it's just a fraction of it, then it should be repriced meaningfully higher, I would think. So anyway, that's what he was getting at when he was looking here. Should I close this universe one too? Sorry, I wish this thing would go away. It's a... Okay, I'll just keep on reading here. GameStop stored EBITDA for an entire year significantly exceeds its current market cap. Comes very close to its enterprise value. Yep. Clearly the valuation is incredibly cheap. That's likely why Michael Berry bought a ton of shares. Okay. Lastly, insiders. Insiders less relevant. I mean, it's kind of relevant because it was Sherman that was buying. And he already owns like 1 million shares. I need some water. James Bell too. But yeah, I don't know. That's me. There's too much stuff going on for GameStop. Sometimes you'll see insider buying for a stock where you're not getting much news or something like that. It's like, oh shit, all right, something's going on. GameStop, we know what's going on. But all else equal, I'd like to see it though, but it's just, it wouldn't make it into an article for me. Insider, oh, well, this is insider own. Yeah, I guess if you count Hesta and Perm and you count the 13Ds, management doesn't own 14%. What do they own? What do we have? We don't have the latest because these are all. I don't have. I looked for this the other day. Where's the latest proxy? Because there was so much going back and forth with the. I couldn't find it. There's so much going back and forth with the board vote. I couldn't find the latest proxy. Is it here? If you find it, let me know. I don't feel like looking through each one, but I opened a bunch and I still couldn't find it. All right. Huge amount of investors are shorting more. Yep. Short. Currently, the company has 507. Yep. As of end of last quarter. What else? That's all we have, so we got to use it. Generates a majority of the operating cash flow. Yep. Higher cash flows this upcoming year because of the new consoles, of course. I feel like some people are speculating that GameStop won't generate free cash flow this year. How? What estimates? I want to see some estimates. I want to see a bearish seeking alpha article, or any article, where someone is bearish on GameStop, right? And they're forecasting, well, just whatever the justification is. But if they're forecasting like cash burn for the first 2 years, that would be the only way you could actually be bear. Like how this, I don't understand how people are shorting at a $4 price point. How the only way you could short that is if you don't think GameStop can generate free cash flow anymore. And if you think that, I need to see your assumptions. What are your revenue assumptions? What are your free cash flow margin assumptions? They're actively cutting costs, and that's going to help. Whereas I think before they had bloated costs, and they were still generating $6 per share in free cash flow. This is what I mean. It's like, all right. Shorters may be in for a lesson on asymmetric risk reward if GameStop is able to impress even the slightest. I guess. I don't know. I've read this for 12 months now. I don't disagree, but at some point you need to see something happen, and maybe it's gonna happen by the end of the. I would say if it doesn't happen this year, then it's I don't know. Barry's bet for GameStop may still be working out. So that's the thing. So it's annoying that it's been flat for the past year, but it may just be that it hasn't worked out yet, you know. And many times as a value investor, you'll get involved with the stock and it will sell off, and you'll realize that maybe you were wrong. The market lets you know pretty quickly. Here, it's still possible that we're wrong, but that GameStop has been flat for 12 months, I view as a positive. And if you pull up the chart, like this has become an increasingly bullish chart, right? The longer the base, and longer the base, higher the space, and this is if it were like this got a little bit concerning, but everything was selling off. You always need context for this stuff, right? So GameStop was selling off that week, and that was the week that reported, but I think everything was many things that I deal in were retesting the lows at this time. But it's stabilized, and RSI is improving on a weekly basis. Check this, I like that. So it's not selling off these down periods. This is why I started to add, because on the one hand I was kind of hoping it would get back below 3. I didn't. I was buying other stuff. So this is, I'm not so upset about GameStop because it was already a big position. In that week, it went below 3 briefly. I know Burry timed it. He nailed it, of course. But that's one of his few positions. I was diversifying across a whole bunch of positions, some of which went up much more than GameStop did. And so I kind of missed out on that. I've been kind of hoping it's going to sell off again, but it's not. It's holding up really well. So I'm like, all right, time to keep on adding below 4. And I think this is a good buy. I felt it was a good buy point. And but this all right. This is the weekly too. It's holding up okay. Like to see it. But so anyway, what I was getting at is that this $4, he's right that it still may work out. Some people are saying, oh yeah, GameStop, it's a good investment, huh? It's really working out. And I'm like, hey, well, it hasn't failed yet. That's all. As long as it hasn't failed yet, which many of my investments, not many, but some do fail. But GameStop has not failed, hasn't succeeded either. But with this heavy of a short position, so I talk about how I look at bond prices and stuff. I look at a lot of things when I'm trying to measure risk for a company. But one thing I look at is short interest. And usually when I see a super high short interest for a company, I'm like, all right, they're probably right. I don't want to get involved. Like, I don't want to deal with bankruptcy, and often I don't want to deal with companies that have super high short interest, because there's usually a lot of stuff going on that it's difficult for me to analyze. But some I do like. There was, I don't feel like going through a whole bunch of them. Let me just, but anyway, it's the short interest. Usually it scares me, not scares me off. I just think it's not usually a good stock for me. But GameStop, it was so confusing to me. I'm like, what? I see the short interest and I dig in and I'm like, what? You don't see companies with this much operating leverage, this strong of a balance sheet, in a major imminent catalyst trade this cheaply. You just don't see it that often. If you have a similar company that trades like that, let me know, because I'd love to take a peek at it. I understand the GameStop's battling some serious risks. It's not without risk, but even still, I mean, I've seen companies that have they're battling significantly more risks than GameStop, because maybe bankruptcy is imminent. That they don't trade this cheaply. I think. I don't know. All right. So what's the conclusion here? It believes that future cash will exceed the current valuation. Of course. No. Yep. As a value play, from my analysis, readers can conclude that GameStop is fighting multiple juggernauts. Current valuation has potential for... Yeah, all right. So, There's not that much here. There's not that much here. It's a lot of rehashed stuff. I'm not knocking your article. I just for me, so dialed in. There's not much here. I do appreciate including the Sony stuff. I thought that was a good chart to include. I don't think anyone's included that in a Seeking Off article before. So props on that. That was good. And then I'll check out the comments here too. Some people are noteworthy. Are there a lot of comments here? All right, so there's okay, but yeah, let me just see that one last chart. So it's a lot of the same. So I think this is a lot of the thesis in here. I think there's more to it than just this. But anyway, just another article. Every time I see something get posted on Gamestop, I get excited. Like there's gonna be. I don't know how it's possible I could miss something at this point, but maybe. But indeed, this is the good chart right here. Let's actually take a peek. Percentage of net bookings or net revenue. Wait a second. Oh yeah, we looked at this one and we just see this one right here. Percentage of net bookings are derived from digital sales. Take two. Okay, yeah. So yeah, look at that. Over what was that 90? What did you say the percentage? Over 90% for Take Two. Over 90%. What is Take Two? What do they do again? What are their big games? Wiki, this is what Wiki's good for this type of stuff, huh? Rockstar? What are they? Products? Borderlands, Civilization, BioShock, Grand Theft Auto? Oh, but there hasn't been a Grand Theft Auto. 2K? Yeah, I mean, I know folks who play 2K and they download it. And you can do the game sharing now too. Okay. Some of these are probably console games too. EA. These are high though. Look at this, 80% for these gaming publishers. Okay. All right. So that's that article. Was there anything? So I mean, again, when I'm dialed into a company, I'm tracking the filings. It hasn't been much on GameStop past couple. The quarter just ended. Are they in that? Is that the quiet period right now? I thought that they during a quiet period, there's like limitations on what you can do. Like a quiet period is you just finished your quarter, and so you might know what the results of the quarter are, but you haven't announced them yet. GameStop will probably announce in mid-September, like the second week in September. That's when they did it last year. There's often limitations as to what you can do during a quiet period, but they like I think that if you have what's called a 10b5-1, that if you file that beforehand, that gives you some flexibility as to what you can do during a quiet period, among other things. And I thought GameStop had one because if you look up their 10Q from this quarter, was it Q3? And you go to the footnotes of how do I find it quickly? Oh, I got it right here. Look at this. Okay, so if we actually look at I just want to pull this up. If we actually look at what the share count is right here. Oh, sorry, cover page 64. This is how I get the share count latest. I mean, I think if you got a Bloomberg terminal, you kind of have this right there. I think they keep that even more up to date. I'm not so sure, but figure 65 million. But then, if you go down here, you see these footnotes. Oh, excuse me. I would want to know what it was at the end of. I wanted to see what it is at the end of this quarter. Sorry. Precisely. I wanted to see precisely what it's 65.9, right? Oh shit. Where'd that extra million go? Did they buy back? What was it? Maybe they bought. I think they bought back a nominal amount in Q4, a really small amount. I think they bought back that million maybe, and then they probably issued some with for compensation and stuff. But all right, let me see this. Yeah, look at this. So including these amounts are repurchases for 0.3 million shares that were initiated prior to November 2nd. But not so. Oh, got it. So does that mean that they needed to have been purchasing the shares already now that the quarter's over? Okay, in that case, I think it's safe to assume they didn't repurchase any share. Not that it's not a big deal, but So maybe they can't repurchase shares, right? Although that is not part of the quiet. When's the quiet period? Is that the quarter ended November 2nd? So, okay. Which were initiated but not settled. Okay, doesn't matter. I like to just close out of this stuff. Okay, let's head back over to the tracker with no plan, no agenda. And I'm just gonna keep. Wow. So what time is it? It's 9. We've been doing this for 2 hours. Shit. No wonder those videos are long. I don't even know. Whew. Okay. Let's see. Let's see what else is going on. You see some other top positions. I mentioned OVV in one of my videos too. That was a big winner. It's kind of it's at an interesting point too. I'm trying to figure out if I should be. It's kind of stabilized with oil, right? I'm trying to figure out. So I'm leaning on charts right now for some of these positions. I mentioned RRC, so I have some options here, and so like this chart still look fine to me. So like RRC was up, like it looked like a little bit of a small little bubble in some value stocks there in early June. Not a true bubble, but I just mean there was a crazy amount of positive sentiment there for a little bit. But then RRC sold off, then it bounced off, and then just had some big down days. But this whole time it's like been in this box, and I'm like, I haven't been too worried about. But same thing with OVV, like I have some here too, and it seems to be holding up just fine. I thought I had it open. No. It's holding up okay. It's just kind of sticking around, so I've been trimming just to, you got to take some gains. But look at this. Oh, nice. Okay. Okay, so Methanex, I think I already added some more. They had some insider buying. This is a Canadian firm. So I think I have, let's see, do I have Yahoo linked here somewhere? Let me see. Boom, boom. All right. Yeah, Canada. So with Canadian firms, if you want to do insider buying, and I should just show you just to, if you didn't know how big I am on insider buying, point out a couple of things in this spreadsheet. Number of insiders who have bought. Like you can see, I clearly have a preference for, I have a type, as I like to say, and then a dollar amount, the sheer dollar amount in millions. Is it millions? Thousands. That was repurchased by the company. But if it's a Canadian company, I can't get it in. I can't get it into the spreadsheet, so I need to go look it up. And this company did have some insider buying from a fund. Is this it? So what I do, so if you go to insidertracking.com and I like to sort by, so I'll just come in here we'll do this. I just come in here every once in a while just to check in on what's happening, because I can't get alerts. You probably could get alerts, but can I disable this? How do I I'm new to this extension. Sorry. I hope that worked. So, all right. So I'll just come in here every once in a while. I'll just start poking. Let's just start opening up a bunch. So there hasn't been a bunch of insider buying for a while for many of these companies. These are a lot of the ones that I'm tracking. Tech. I'm a big fan of tech resources. Damn. How do I? Bummer. I just did this recently. Bummer. Hey, here's a shortcut. Let me test this out. Can I do this? Let's see if this works. Sorry, insider tracking. I'll figure. Oh, did I do it? And then I got to do this. Oh, but if I start opening the other pages, I'm going to fail. Where's the body? Right here. Is this going to work? Okay. But I think if I open up the other pages, I don't want to have to do this on each page. But let me just see if I can quickly take a glance at Methanex. I'll figure out. It's uBlock, right? I used to have AdBlock. See it real quick. Let's see. Oh, dispositions. Is it by? It's not by the fund. Oh, it is. Oh, they're disposing. Oh, glad we looked. What? They're selling. Oh, I'm glad we checked. Ah, damn. Oh, I guess I should have made sure that I was an expert user on this. Oh, there we go. I'm an idiot. I'm an idiot. There we go. Oh shit! So they're selling. I actually don't know. I think I looked at you every time I'm seeing some buying by a company. If I don't recognize them, I'll go dig in. I think this is a bigger fund though. Not like sometimes I like to see like a specialty hedge fund because they're. It's like a big, huge. What is this? It's probably their hedge fund. Bottom. All right, it's messy. 300 billion. Oh, all right, never mind. How much are they selling though? They had a big position. All right, this matters because this is the big position in the portfolio. Not a huge position. What is it? One, but I had added. I might have messed up. Let me see. I was adding around. No, I didn't. I missed that run up. I was adding around here because I like the setup, and I think they were still buying too. I like insider buying. Do I have this in here? Can I check this? I want to check this. Fundamentals. I wasn't too familiar with this. Is a newer position for me. I track so many companies, but I don't think I've been long meal before. Methanol, yeah, it's methanol, and so I talked about crunch time in some of my videos. I looked at so many companies in the month of March because as many as I tracked, I wanted to own more, and before I wanted to own them, I wanted to read about them, and I was reading about their businesses, and I was just trying to make sure it's just a legitimate business, and what their produces and supplies methanol. I don't know much about methanol. I don't know anything about methanol really, but I remember what I was reading. It's like whatever it was, they seem like I have a good legitimate market share. It's a legitimate company. I mean, it's a good size too. What did I see? 1.8 billion. Is that what it was? 1.4. So I can't say that I'm like this. I'm super confident in it, although it is a bigger position. Can I see this chart again? Shit. So I was buying it. I was buying it probably below. Wow, I never got that cheap. Interesting. So I was buying around here. I was thinking maybe it's going to get back to that 20 to 25 level and then figure it out from there. I think it was levered. Let me just see. I checked it off, right? Oh, yeah, I do have it in here. It's because I closed it. Dirt. Oh, right. This is the ad hoc one. Do I dare open up my report again? If it's slow, it better not slow the stream. I up my internet to try to make up the speed to try to make sure that everything flows smoothly. Plus, I've been uploading the videos and stuff too. I just want to make sure it goes smoothly. Boom. This is great. I mean, this is great for me. I used to have to look it up each time. This is great. All right, so this is one. So sheer level of revenues. There's I wonder if I could probably boil it down to a rule. I've tried this in the past. A lot of value investors have, but I could boil down my risk components into a handful of things, I think, and then and come up with a score or something. I probably should do that. It's most helpful, and this stream will be most helpful during big sell-offs and everything, because then it's kind of like shooting fish in a barrel where there's so many things traded cheaply and you're just trying to make sure that you're just picking the right ones. That's all. But that's a big edge that I have during that time, is that I kind of am already tracking the names and I know which ones to pick up and what their value is and so forth. Anyway, one of the things I'll quickly assess, and I did this with Methanex, even though I don't remember doing it, but I'm certain I did, is I looked at the sheer level of revenues, and I saw, it's a Canadian company, so I only have year-end data through last year, but I saw $3 billion in revenues. So if you see $3 billion in revenues, legitimate company. By the way, Gamestop has $6 billion at the end of a tail end of a console cycle, but $3 billion, legitimate company. Then it's just a question of, is it going bankrupt? And also a history of success. Look at the success here of some equity growth. I won't get into what this book measured ROE calculation is right now, but all this green and purple is a good thing to see. But what I'm also noticing is, and they were doing it when they weren't too levered either. It wasn't that you can amp that up by increasing the leverage. But now they were getting a bit levered, which I was taking note of. And do they have bonds? Are they still trading? Oh yeah, they're all here. So look at these are all right. So it's levered, and all these bonds are seen. But look at this, 2044. I don't know how much is that for. You trading at 81. What? Oh, so this is that no. There's risk here, but not that much risk for someone like me. Relatively, it's all relative. There's not like look at those bonds. And I did look into methanol at the time and what that industry looks like, but I forget. But whatever it was, yeah. So this was a good setup, and I still like the setup. Now what I'm seeing, and even though I see this, it's a little bit levered here. Leverage is often one of the most common risks that I'm battling, is like that bankruptcy or credit risk and stuff. But look at this EBITDA of $7 per share last year versus that. I know it's EV, enterprise value, is supposed to use, but even still, the market cap of, the share price of, what was it, $12 when I was buying? I'm like, come on. And common EPS, $2. Look at this, historically profitable. Oh, you know what? This is looking kind of interesting. Okay. See, it's good to check up on these when they're moving and stuff. This is what so let me know your thoughts in this stream, because I'm starting to think that, although now it's after 9 o'clock now. I was thinking it might be after I've decided to do 7 to 10 Monday, Wednesday, Friday. I was thinking maybe that's not a good time. Maybe it would be better to do shorter streams, but every day, because there's something happening every day, right? Things are moving, and that's what causes me to go dig in and check up on stuff. So I'll give it some thought. We'll see. But anyway, but then like stuff like this, I'll dig in. I'm like, oh shit, yeah, there was something going on there. And because I can only get really dialed into a handful of companies. I know I have a shit ton of them in the portfolio, but ones that I know like the back of my hand, there's not that many. So I see things like this, and I'm like, should this be one of those companies that I should know inside and out? It looks interesting here. It's not that cheap right now. What is it? Is that $24? It's not at $24, is it? Yeah, it's at 18. What's up with these prices? Oh, I think I need to. Oh, I know what happened. I found. Oh, I need to fix this. Sorry, I need to make a note for myself. The prices that are being sucked in to these spreadsheets, it's not. It hasn't updated. It needs to be automated. I need to add what's called a trigger. I don't want to pull it up right now because I don't want to lose my screen. But there's a trigger with Google Sheets. Google Sheets are sick. They're super powerful if you need them to do some pretty cool things. Like I can automate pulling in data and stuff. And right now, I could just do Google Finance prices, but I try to limit the number of calls to Google Finance I'm doing because that hurts spreadsheet performance. So I have other spreadsheets that call the data and then call them into all the other spreadsheets. And this one, I didn't add the trigger to this spreadsheet, so I just need to add a trigger to it. It will only take a couple minutes, but I'll do it later. All right, so I should probably start looking into this, but it's not stupid. It's not super stupid, crazy cheap or anything like that. It's just kind of cheap. And when it was, and when I saw the insider buying, I liked that. Although, yeah, how much are they selling right now? So they were still buying. This is the thing. They were still buying in July. They were 48,000. So they're all okay. So they're just trimming. They're just trimming and adding. Oh no, they sold 110. This is such a big firm. They're kind of doing. Are they just moving it in their accounts and stuff? Their funds? I don't even know. These are small amounts. These are just rebalancing. All right, so no, they're not selling. These are small. Maybe they're trimming. Nothing alarming though, because didn't they have? Although this is a big sale. What are they doing? But they just bought that much before. Are they moving it between their funds? Like I should know what I don't see this too often. This seems excessive. The thing with this insider track, it always goes back 6 months, which is kind of a drag. So you need to kind of stay on the ball with the companies. But I'm not gonna get right now. It's just a question of add or trim or what do I do with this? I can't say it looks super compelling on a fundamentals basis. So I would need to see. This is the thing. So I would pull up Seek and Alpha here. Anything happening here? Probably not. Canadian companies tend to be less followed, which is kind of a perk. Potential multi-bag. I think, oh, this one came on after, maybe I read this before I was adding. Largest global. See, I saw that. Yeah, largest global methanol producer. Even if you don't know much about methanol, if you're the if you're the largest producer of it, holding 13% of the global. All right, so it's a diversified. Not diverse. What do you call that? When it's spread across a whole bunch of companies. Company has managed to Minnesota index. It's one of the largest methanol producers in the world. Blah blah blah. Is there a thesis here? Sometimes there's bots producing these too. And what are you gonna do with that? Like, sorry, I haven't read this. I gotta forget this article. This might be a legitimate article, but sometimes I'm just checking to see is there an actual thesis here, or is it just someone pumping out a piece? This looks like a legitimate piece. All right, so I may reread this later. I don't feel like doing it now. Okay, let's just looking at a track record of managing through commodity cycles. While it's ill-timed decision to pursue a large brownfield expansion. Yep. The stock has an incredible torque to methanol prices, which are highly correlated to oil price. All right, so if it's cheap, from what I can tell, maybe it's a double. Maybe it's but maybe it's a double. But this looks interesting. I'm glad that I've added this to my list, and it deserves to be in the portfolio just based on these numbers alone. This is what I mean. I am a fundamental value investor here, and how's the chart looking? I mean, I guess it looks okay. So this could be a hold right now, but I'll read the press release too. I saw that they just announced here, but usually I really start getting excited when it's like trading really cheap. It doesn't seem like it's trading that cheap right now. So if I'm just trying to assess what should I do, I'll just check the headlines and stuff. So okay. Now BXC, it's not. Oh, these prices that's not up to. Is it $14 BXC? No. Oh, sick. I have that in this has been an interesting play. Yep, this is sick. Okay. This actually could be one of those 10 baggers too. From the lows. A very risky play, but I thought the story looked really compelling. All right, damn. I wish I have it in some other plays. I have exposure to this other ways as well, but this should have been larger. So I went more with CNR. I wish I went with some BXC. I went some more with some BXC, but it was super leveraged. But it's got an interesting backstory too. There's lots of articles on it. You can check it out. Is there a Seeking Alpha one in here? I forget. No? Damn. All right, well, that's good. That's good that it's on the way up. Any recent articles? No, not much. I did read that one. Okay, so that one's interesting. Still 137. That one could probably, I'd feel comfortable saying that well, I don't mean comfortable. I mean it's a risky play, but it maybe from here I'd play it for a double or something. It could be a triple. It could be more than that, but I don't know. Select energy. Yeah, so I'm just going through the positions here. It's been a while since I've done this, so this isn't what I'm doing every day. Just a heads up. This is just what I'm doing today because I didn't check the market today, but it's also been a while since I just did this. I've been working on the Vern Kitty stuff, so some days we'll dig in deeper into the individual positions and actually start reading through those Seeking Alpha articles and stuff, and sometimes just tracking prices of indexes and commodities and stuff. But right today, I got to do this. OMI. This was an interesting play too. There's some good articles on OMI too by a couple of Seeking Alpha articles. Damn, look at that. Yeah, I did have. Wait, where is it in the? Damn, it's not as big as I added to it. Wait, where is it? Right there. 1%. Okay. I had added to this position. Super leveraged, but I like the turnaround. Plus the chart's looking good. Chart had looked good. Plus it was like a little bit of a COVID play a little bit. I think they were developing something, producing something that was going to benefit at the tail or eventually. Max. Oh, this one looks interesting too. I've owned this one for a while. I bought this one before Burry did. We might have bought it at the same time, but I bought this one on two things: on the chart and on the story. There was a Seeking Alpha article published on it, and it wasn't so much that I believed in the story per se, but whatever the setup was, it was like it offered some potential asymmetric upside. Where was it? I don't remember which one it was. Might have been this one. No, because I was involved earlier in this. Because of the chart is what got my attention. So the chart's also useful for screening too, right? I was seeing this happen. I was like, oh, maybe it was. I think here it was getting my attention. Then here, and then right around October, and then it started taking off. And so I've been involved, and then Barry filed. I think it was a Q4 build for him. I think, but it's got a potential, and you saw where it was trading before, right? I mean, that matters. And it looked interesting again below 10. I bought more below 10, and right now it still might be an ad, not a super high conviction ad, but maybe an ad. I've been kind of just watching it right now. Look where it is right now, chart wise. It was trading around here, and I was peeking at it in July, being like, "Damn, should I be adding?" I was kind of hoping it might pull back a little bit more, but this chart it's looking good. Look, how about on the daily? All right, maybe add on a pullback. I think I'm already tracking on the buy list. I'll reread that Seeking Alpha article too. It's not like if I pull up the fundamentals, I have no idea. I don't know. What do I know about satellites? I don't know shit about satellites. I just read the thesis and I'm like, all right, there could be something there. That's why it's so hard. I say this in the videos too, but people say, oh, value style is not working, and it's dead and whatever. Like, but there's so many different ways to perceive value. It's not so simple. Just price to book, P to E. There's other things you can see too. Like, for example, insider buying isn't captured by basic fundamental metrics. But if you like did higher quality value by focusing on companies that were buying shares of companies that did have insiders buying shares, or the ones that you could also look at the bond prices and see they're not trading at $10, the bonds, then you could probably cut out a lot of the riffraff, if you will. And yeah, so anyway, so I saw value in Maxar, and then I was pretty excited that Barry had bought it too, because I'm like, yes, all right. So I was on to something there. Maybe he probably does know satellites, knowing him, and I know he's got a team too. They probably pouring over that ship, and but then I already owned it. I'm like, all right, maybe I'll add a little bit more. I probably did. I don't remember, and but yeah, so that's what I mean. Like, I don't think Maxar could ever have been classified as a traditional value stock. Oh, do I get it checked off? I do have it checked off. Look at this. Circ. Yeah, so first of all, they didn't have that much data, right? Which is already tough. But look at the tangible book, negative $40 per share. Look at the debt. Look how levered it is. But I guess it was kind of trading below book value at some point here. Kind of. But negative book value, who gives a shit, right? And then EBITDA was negative. Now it's at 11. Holy shit, it's at $12. It turned a profit past 12 months? No, that can't be. What? So, and it was, look at it. It's at least generating positive cash flow. I should look into this again. 1.5 billion in revenues. That's a good sized company. Not large, but bigger than the smaller ones that I'm dealing with. That's good to see. But again, so I looked at the fundamentals, but like, who would ever look at this and be like, oh yeah, that's cheap. That's cheap. You never would. This is ridiculous. Me of 5 years ago or 10 years ago would never touch something like this, because I have no idea how to value it. I don't know anything about satellites, but this is, I tried to adapt over time, and this is a great example of it. So I should check this out again. I'll reread that so I'll read that thesis and consider and watch the chart too. Boy, were they really profitable? Is it like a Tesla profit? All right, I'll check it out. Check it out later. Okay. Let me just check a couple more things in the portfolio. Really just want to check out the big ones. I should be checking out the smaller ones too, because it's time to cut back the number of positions. Why do I think that? The reason I haven't been chomping at the bit to do it, because I don't know, we're only still like a couple months into this recovery. I know it's bounced back so strongly, but I'm still a little bit uncertain. Like, I don't know if we're necessarily out of the woods. We could be, but I don't know. And so I kind of wanted to keep on some diversification, except for GameStop. GameStop's been kind of it's getting bigger. But that's because we're getting closer to the consoles and stuff. But most other positions, except for, yeah, it's just been pretty diversified. And so I've just been a little bit hesitant to go too heavy into too much right now, just kind of seeing what unfolds and watching stuff. But SPR, Mac, that one looked interesting. Howard Hughes, I know who is it, Ackman? I feel like this is a Look at, oh, it's stale. This is probably, yep, I think this is a good one. I don't know if it's necessary. I forget what Ackman was valuing at. He thought it was, wasn't he buying at like 100 or something? He did something. I think he might have bought on that. I think he bought it like 100, so he thought it was like worth twice as that probably. And then it pulled back, and I know he got involved. Wasn't he helping them raise money or something, like 500 million or? So it's probably safe if he's involved. It's a real estate company, and I'm not too familiar with it, but that's huffing enough. It was trading kind of cheaply, and he was involved, and it looked like almost immediately it looked like it was going to be financially secure. So it's probably a longer term play, but it looks good, looks compelling. So I'm okay with where it is in the portfolio. Longer term hold. Home builders, Beazer. I've been, like I said, I was trimming those. Oh, FLR. I haven't looked in this in a while. Yeah, see, this stream's good for this. Like, I'm supposed to be on the ball with this stuff. So, oh shit, what's going on here? Look at this chart. I've taken FLO used to be. It was like a top 5 position. I've really liked it. Where was it trading? Yeah, look at this. It was trading below like $4, something absurd, and it's not even that levered, relatively speaking. I was like, what the hell? And then when it got up to, once it was getting up to like $10, I definitely started trimming around then. And I haven't bought any, definitely, in the past 2 months. It's still kind of, I'm not buying here either, but this, am I selling? Am I trimming more? Anything going on in the, I don't think so. I check out the inside. Oh, let's check insider buying too. Yeah, they didn't buy anything recently. Interesting. All right, that's one to keep an eye on. I think I'm going to put it under potential sell. I don't know. Is it listed? Might already be there. Oh, this list isn't very long. Oh, you can see this was my sell list that I put together when I was kind of building out the spreadsheet a bit. A lot of home builders on here. I was very bullish on home builders, but they rose so quickly, and the trend could continue. Right? That's the thing. You don't want to sell your winners or anything like that, but based on my valuations, they were kind of getting fairly valued, and I thought I think the upside's a bit limited. Although they've already ran, I'm glad I held them. I have held them as long as I did, because I probably thought they were closer to fair value, like 30% lower or something. They've continued running, and quickly I've been like, oh man, good. I'm happy that I just got lucky that I held on as much as I did. I only trimmed it lightly, and I'm like, yeah, these could keep running. And there's like 5 or 6 of them out. Look at this. It was below. Do you believe this? It was below $7. $7. 740.21 triple. So some of these are 5x, right? But still, something like a home builder, that's great. KB Home too, below 10. Wasn't it below 10? 11? Look at that. So I won't pull these up, but I mean the show actually it's actually close. It's close to where it was valued here as well. But if I pulled up the fundamentals, I remember thinking, I don't know how much. Yeah, if the trend persists with, if the macro trends persist, yeah, it could probably continue growing. Maybe it could double from here within this cycle, but I don't know, double from here. I don't know if that's a risk I want. 3 billion market cap, 3 billion market cap. Toll Brothers 5 billion. Do I own? I guess I must still own Toll if I have it here. ASPS. Oh yeah, that was an interesting one too. What's that doing? This one looks interesting. Yeah, I got in around here. I think I added more around here. Looked like there could be some upside. The guy, the person who founded that, or has a good chunk of position, he started. Was it Aquin? Was it Aquin? I think. Multi-source portfolio solutions. Can I do this? Oh yeah. I don't feel like looking into it right now. Not that. OVV. So OVV, yeah. I say I got it on trim here, huh? I got a good sized position in it. All right, that's still just watching it. Just watching it. Sorry, I just want to clear out some of these. CCS. Okay. That was another one too. That one looked really. Look at this. Damn. I mean, it was a good home builder. I mean, I think home-related stuff was like 5-10% of the portfolio. It was like a good chunk, and I'm glad, but I'm still like, damn, maybe I should have even had even more. A lot of values worked out well, though. Adient, they have a lot of auto-related stuff. Was it Seats? They based in Ireland or something? Yeah, this is okay. It's super levered, super levered. It actually could be worth quite a bit more. If we back out the chart, I think it... This is tough though, because it depends where we are in the cycle, and it's okay to be having the portfolio. I don't hate it here, but I don't love it here either. That's the thing. I'm loving stuff less right now. I love it when it's trading really cheaply and I have a fairly high conviction in it. Oh, Camping World broke 40. Sick. This was gonna be. Oh, this already is. This is the 10. This is the 10. We already have it. Oh, I can't believe that. It did it. All right. So Camping World was another one of those companies. I didn't know it broke 40 today. Wow. So and I bought more Camping World, and I mean it's where is it in the Roaring Group? It's still up here. This is after I've trimmed a ton. I've trimmed a ton. 3, 6, 7. It's the eighth position, and this is it. So I wasn't sure. So when it was 50. I was already tracking it. I was invested in it. I was following it. The trend was looking good, and then it popped up in February. This trend was still looking good, and if you do a 3-year chart, and Abrams is involved with this too. He's a value investor. He's from Baupost, I believe. He originally, and then he got his own firm, but he was buying around the same time I was buying it. We were seeing similar things, and the CEO there, he was buying shares himself, and so we were kind of riding the wave here, and then it got crushed, and then I was buying more, but then I started to I was like, shh, is it going to survive? And then are people going to have the discretionary income to buy the campers? And then as it turned out, it was more people might want the campers, right, because of all that's going on. And so this is if it became a COVID play, although I didn't know that it would be, because it's super levered. That's the thing. As I recall, it was super levered, and so there it is. I didn't realize that I had the 10-bagger from the lows. I've had 10-baggers actual. I don't think my average cost is more than the low, of course, but I definitely bought. Did I buy this week? I bought some share. I bought some March 23rd. I bought some this week, definitely. And maybe this week too. Wow. Damn. Wow. Wish I bought more. We'll find more. 10-baggers. They're out there. They're a thing. They're not just tails, I promise. Wow, I got to add this to my list of like in my head, I got like a list of companies that I've been invested in and have turned into 10-baggers. I've gotten a number of 10-baggers myself. None where it's like, well, that's not Tech Resources has been a 10-bagger. That was one that actually was the largest position in my portfolio at the time, but I was still diversified. It was a larger position, but just like marginally so. And but most of them, they're just like regular positions. It would be great if the biggest position became a 10-bagger, you know. But the Camping World was right up there, though. Like I said, I've trimmed a ton, and even at the lows, it was still a top 10 position, I believe. I think I took some screenshots and downloaded some spreadsheets, so I should check. Anyway, it's just nice to have a big winner like that, and I didn't know I had one, so I'm learning here in real time. Cool. And some of these other ones, sorry, I was on the sell list. Let's get back to the sell list. I'm gonna keep my eye on that. RRC. Oh, so I got the natural gas. Interesting. I had the natural gas players, but this is because I had them on here because of the options, the time limited options. So it's kind of like a reminder for myself. Hey, heads up. You might want to trim. Was there something else I wanted? Why did I come over here? Was there something I wanted to add to the trim list? Oh, potentially. No, Mio. I'm like neutral on Mio. That's okay. Was there something I was going to add, though? Oh, well, I should add Camping World's here, too. Right. That's why we talked about it. And then, okay. SPR, CDR, silver and gold have been crushing it. Yeah, I said this in one of the videos, too. Gold and silver have been looking good. Precious metals. MHO was another home building. How are we doing here on these things? So I'm going through this because, like I said, it's been a while since I've actually gone through the list. I've been working on some other things, and it's important to like refresh myself. I've been waiting for this stream to like, all right, dude, this is trying to light a fire under my ass to get back to being on the ball. Travel centers, and like just get a better sense of where the price points are at all these, you know, because this was happening in March, where I knew where all the price points were, and so I knew everything was cheap. I knew everything was discount because I knew they were trading, and I know roughly what their fair value was. And so I know everything is cheap. Right now I'm looking at the prices and looking at the charts and seeing where they are and thinking, all right, things are definitely closer to fairly valued. Some are potentially even above that. I'm trying to see if things still look super cheap. Some are, if certain trends are turning around. Fossil, that one looked, oh yeah, this one looked, there's some insider buying here too. This one looks like shit, huh? It was just at 8. This one looks interesting. I mean, there's watches. People are like, who wears watches anymore? You got Apple watches because of smart watches and stuff. And this one looks interesting. I want to put this on my buy list. Fossil and DBI. I was watching this one too. What's going on with this one? Oh, that chart's looking good. Okay. Yeah, this is looking good. Let me check these fundies again. I'm gonna add Fossil to the buy. It'd be nice if I had a link. Can I give myself a link to go? Because then what do you have it linked to? It could be linked. You might want to add it to the sell list too. Is Fossil already here? I got a lot of buy. Oh, look at that. So I got Mio on my buy. I think I'll get rid of that one. Let's take that off the buy. Revolve is on my buy. Resi. What's Resi doing? Oh, we can go through this list too. Tuesday morning, that one looks interesting. Bankrupt company. Clipper. I didn't have Fossil. Okay, good. Oh, I got GameStop on the buy list too. Yep. So that's what I mean. As I look through these names, I'm trying to see which ones look, if any of them look super attractive. And as I look, some look cheap. As in when I say cheap, I'm thinking like they could be like 3-baggers, potential 3-baggers. I see a lot of potential 2-baggers. But a higher conviction 3 and 4-baggers. Certainly, if some of those macro trends are turning, things like natural gas type stuff and energy too. If energy bounces back in a big way, like there's still some 3-baggers to be had there. But that's just like I said, it's a macro play. But individual names, the only one that really Resolute RFP could still be a triple there too. I like that. Could I add to that? Yeah, I don't know. That one's still a good one. CNR looks compelling, but GameStop, I mean, I don't know. As I look through all these other ones and where they're currently trading, a lot of them they don't necessarily look super cheap. But all right, so sorry, I hadn't looked through this buy list in great detail in a while too. So look, enter ARs in both lists. It's in both the buy list. This is the buy list, right? The buy list and the sell list. Same thing for RRC, right? CNR. Oh, I still got that. Should stay on the buy list too. Something to keep an eye on. Maxar, I got that on the buy list. Oh, STKL. Oh shit. Yep, I got that. See, I was involved with this one last year. They had some great insider buying, and then that turned into a bit of a COVID play too, because I think they sell packaged foods and stuff. And then it's funny how there was perceived value beforehand, right? Before everything kind of before the pandemic, and then like perceived value, and I saw value before anything happened, before like there was people were bullish on it and stuff, right? And then something terrible happens. I mean, in this case, to a whole bunch of companies in the world, right? And a lot of things sell off, but then it takes something like that for people to like, oh shit, this thing does have value. And indeed, maybe it's increased value because of what happened, right? That certainly could be the case with the camping world where there's higher demand for its products, right? I get that. But even still, this is what I mean. You could have perceived the value beforehand, and then something like this happens, and then it's like a good reminder to the market that to take a peek at it, and then look at it. And then this is over a triple. And I had it before. I owned it before, and then there you go. I think I bought more. It doesn't matter. But I don't. It's kind of levered. I'm not sure I would. Is it on my buy list? It's not. It shouldn't. I don't think I like it on the buy list here anymore. PBF maybe. That's a refiner. Carlos Slim holds a big chunk. Oh, this is looking good. Okay, this should be on the buy list too, I think. It's already a good sized position though. Oh, you know what I should have right in this view is what percentage of the portfolio. It should be here too. Oh, that's something I should maybe add. Because PDF is already a big size, a good size position in the portfolio. Where is it? Yeah, right here. It's got some. I'm taking a note here, but it should all be in the spreadsheets. Okay, so there's some ones out there. Like I think PBF is it's riskier, but I think I feel it's probably a solid triple. I think. from $7 or $8, I think, anyway. Okay, seeing this is all this stuff. This one is interesting. This one quad generates a lot of cash flows, but very levered. CVGI, what is it trading? 247. This is making me feel better about the Gamestop position. So that's what I mean. All these risks are diverse, right? All these companies have their own idiosyncratic risks. Of course, there's the broader systemic risks of the market could take a dive, and then all my value stocks will collapse, right? That's going to happen if that could happen. So that's a risk that I'm willing to take. But and then you have like commodity risks or like or levered credit risks and so forth. But GameStop is a idiosyncratic risk itself, and I like it in the context of this, especially because relatively speaking, it appears to me more attractive than a lot of my other names. So this is interesting. Then this is how you try to size the positions in your portfolio, right? This is the type of stuff you think about. And this is why it's important to review this stuff, and hope I'm going to be better about it because of this stream. That's the plan. Flowtech, that looks good. This one still looks like it could be cheap too, but it's the same. It's the same risk. It's the same risk across all these names. You know, like Flowtech's an energy name. And if it goes up, and then everything's going up. I mean, if it's going up, a lot of similar names are going up the same amount. So it's just like a diversified approach to it. IO, I like this one. Looks interesting to me. This is a speculative one, but I feel like this could go up quite a bit. It's another energy name. It's just a different take on the same thesis, really. But all right, this is the buy list, right? DXC, yeah, that's a Einhorn, Greenlight, yeah, Einhorn, Finkel is Einhorn. Oh, sorry, it's just, but Greenlight they had a position in that. I liked it too. They generated a good amount of cash flows. It didn't bounce back as strongly as I would have liked because I had it in the portfolio. It used to be a bigger position, but then as everything else started selling off, I didn't like it as much as some of the other positions, so I was buying those. RESI, MAC. DBD, what's this doing? That one looks interesting. Yep. So super levered. They do. I believe Diebold. They make the ATM machines. I think they're making the ATM machines. Hey, thanks, man. So thank you, Nick. Sorry, I'm new to streaming, and so I didn't even see that comment. I wish there was a time here so that I could see when you posted that. Sorry, I missed it. But hey, what's up, man? Thank you. So this chart looks interesting too. And Diebold, but super levered. I think they make the ATM machines and stuff. I'd have to dig back into the fundamentals for that one because I think it was. Remember this was a good one that sold off in 2018. Turned into be a 5-bagger. I didn't buy it at the time. I was watching it and then I missed out on that one. But so then I added it to my list and then I was buying it this time. Pretty sure I own it. Hey, all right. Cheers, Nick. Thanks. So I didn't miss it that much. All right. Thanks, man. Appreciate it. Yeah, I'm still trying to figure out the streaming thing. I don't even know what we're going to be doing during all these streams. So today I'm just trying to get caught up in a whole bunch of my positions. I've been kind of waiting for this stream to kick off. And sometimes I'll be digging deeper into some of the positions, but I'm just trying to reassess where I'm at. It's been a while since I looked at the price points for a lot of these companies and looked at the charts, and it's really beneficial to be on the ball with these types of things. So today's like day one of being more on the ball with things. And plus it's been a couple of months since things have been hectic. So it's good. It's just good to reassess for that. So that's kind of what I'm doing, at least in these early streams, but I expect to be digging deeper into stuff. And just a heads up. And Pulse, I don't really care about that. Trend. All right, so this is a thing I could use some help with because this thing, I mentioned this in one of my videos too, is I wanted to have a watch list of companies that are trendy, that have been trending upward, you know, and because when the market sells off like it did, you want to diversify and you want to be, I still want to be dabbling in some companies that I might not traditionally dabble in, but because those could be the ones that could bounce back the strongest, I want exposure to them because it's not always value that kills it, and so that was part of my thinking with this. So this is a list I just put together like quickly, kind of off the top of my head. But as we see good charts, in fact, we saw some today, that I could have been, we could have been adding them to this list. I won't bother right now. I don't feel like going back. But like some of those charts were just like recovering. You know what I mean? This is a little bit different than a recovery chart. I don't know. I'm open-minded. But these are charts where the trend looks good. And I don't know if you've ever heard of Tesla before, but this chart looks kind of good. It's looking for. I don't own it. I know it's a divisive stock itself, just like GameStop. But look at that. Oof. I know a lot of people are short it. I don't know how they're short it. I know they've been shorted for a while. I don't know. But anyway, but stocks like this. So like I didn't buy Tesla when it sold off, but I wish I did. I know I'm a value investor, but in the context of a broader portfolio, I felt looking back, I felt it make sense. Even on the chart, it retested this support down here. And I mean the fundamentals. I don't know. You can't analyze the fundamentals of Tesla. Don't bother. You can assess the story though. The story is very compelling to a lot of people, as is indicated by its market performance. And anyway, this is a good example of something that pulled back alongside everything else. And maybe many people thought this is the end. But I didn't think that. But yet I still didn't pull the trigger. But this is what I mean. If you saw my other video, this was a critique I had of myself, and this is what I'd like to accomplish. One of the new things I'd like to do differently. Tesla, and then even in Amazon too. Like I so rarely deal in those types of companies, and the market gave us a tremendous opportunity. Now, like I said too, like I'm not trying to just get doubles though. So this is why I'm not critiquing myself too hard. But still, if you're looking for some doubles and triples and trying to diversify, how do you not buy Amazon? Whatever the hell that price was. I don't even know what the hell the price was, but I remember it was, what did it trade at? Oh, it didn't get that cheap, I guess. Jesus. 1,600. Oh, wow, it's doubled. Oh, my God. Jeez. Oh, I saw the market cap of Apple the other day. It was like 1.8 trillion. Is that what it is? That's what I mean. I kind of been out the market cap and the price game. 1.8 trillion. Damn. Anyway, these are additional examples of charts that were really good beforehand and they pulled back. Look at the same thing with Apple. You know what I mean? Like I'm a fundamental investor. How do you see this? And like, all right, well, this right to the lows of the market too. Right that week, and it retested its support. Shit. And anyway, I didn't buy it, but just something. This is just something for us to keep our minds on. Of like, always tracking stuff, always testing stuff, and see if there is some truth to the technical analysis and the charts and stuff. But wow, look at that shit, huh? Damn. 1.8 trillion? Oh man, all right. I'm not saying it's overvalued or anything like that. I don't care. It just sounds like a big number, doesn't it? And anyway, so let's try to build out this list, because I mean, I don't know if something like March of this year will happen again in the imminent future, but you can never say never, right? Always be prepared. And I was pretty well prepared this time around, but even still, I'm still finding some holes in my approach and in my strategy and stuff. And this is one thing I'd like to do differently and do better for the next round. And gold was in here too. Gold was looking good. How's gold looking? Gold's been crushing in the past couple months. This has been great. In new gold is new gold. New gold was the top position in the portfolio, if you can believe it. And it's hard to defend, because I know it's kind of a riskier company. It's the second position in the portfolio. So I'm not a gold bug per se, but I've been bullish on precious metals here for a bit. And new gold has been a good one for me past couple months. What's it going to do from here? You know, that's what matters. I don't know if it breaks above. Are we above 2? Are we above 2,000 an ounce? Did it break? Hold on, let me see. I think if I could just do this. Yes, shortcuts. Oh shit, did it do it? Look at that chart. Okay, so here we go. So I'm glad I got the gold miners in there. And they've been in there for they've been in there for a while. Hey, did it break it? Oh, it did? It hit 2009? Oh, shit. Sick. All right, this is bullish. Maybe there's going to be a pullbacker here, but this is bullish. This is bullish when it broke above, this is what the books say. It was bullish when it broke. Sorry, I know I'm jumping all over. It would really look good. When it broke above 1,400, that was the game changer. I mean, first of all, I had a lot of big wins, fundamental, value-wise. It was cheapest. A lot of the gold, this is gold, the contracts, the actual gold futures contracts, but the gold miners themselves, they were cheapest in 2015, 2016. I bought a whole bunch of them back then from a sheer value perspective. But then the charts. So this is the thing. This is why I try to look at more things. I try not to be so value-focused all the time. It's the basis, it's the foundation for my strategy, but you need to be flexible. You need to be looking around. So I bought a ton of gold right around this time. Options too. I got really lucky on the timing with that one, and then it kind of did nothing this whole time. And I I kind of missed this. I was focused on some other stuff around this time, and this was a good time to add because you start seeing the trend, the longer term trends turn. And these are the multi-year trends I'm talking about with natural gas. I was talking about that earlier, where like right here. So I got a big quick win and some gold, right, on some of those options. But then it then it came kind of back down to earth, and then it kind of just did nothing for a couple of years. But then when they pull back, now you're a couple of years into this new trend, right? And that's when you're waiting for pullbacks, because then it's like, all right, usually these things are trendy for 3, 5, 7 years. It takes time. And so those are the types of dips that you're trying to buy. And I missed this one. But then I'm like, all right, well, I tried. So then but then when it broke 1400, I'm like, I kind of missed it for that value dip back into a little bit of a discount to fair value. And some of them were trading at a discount. I look back and I'm like, shit, I missed it on that one. This is why you got to be on the ball with this stuff. It sucks. I mean, it sucks because if you miss it, because like, damn, if I was just on the ball, I definitely would have had it. But on the technical side, then it broke above 1400, and then you have another leg. There's another leg to the thesis. You know what I mean? You got the technical leg. And that's something I talk about it in that GameStop video. Like, you could get it with GameStop too. I don't know if that will happen, but if you get it, look out, because then there's going to be a whole bunch of other investors who are piling on too. And you're damn, this is actually a big jump with gold though. That seems quick though. That doesn't mean much, but like if it pulled back, if I bought now and pulled back, I get annoyed. So right now I'm the type that will just keep my eye on it, maybe wait for a retest or pull back. Maybe it retests down here. I'd like it maybe below 1900. I'm not buying the futures contracts. I'm just kind of just speculating, shooting the shit right now, right? I don't have much beer. I need to have 2 beers down here, you know? But yeah, this is bullish though. This is a bullish looking chart, and unless there's, although this RSI, oh, this is the daily. Oh, is this weekly? All right, you definitely want this RSI to get up though. Like it peaked and then it is a lower peak. You definitely want gold to remain. Oh, this is getting a little bit bearish there. Something to keep your eye on, because you want to see RSI getting higher and higher and more overbought. Otherwise, it means so the books say. So the books say. Don't hold it against me. But anyway, okay. Shit, it's 9:56. Oh, I thought we were gonna have a tough time. Damn. Oh, I didn't even get all through I'm talking about how it's so important to get through my damn names. I didn't even get through. I got through some really important ones though, because I needed to follow up on a lot of those names. What else what do I do with my last couple minutes? I don't know. Let me close out of some stuff first of all, and then let me just check. Let me just check. I'll check the dash again. Those commodity prices. I just want to see the sheer level of them. So yeah, natural gas I missed. So I got to fix this. The conditional Florida Manning. Make a note for myself. Silver 24. Yeah, are these kind of getting frothy though? They might be getting a little bit frothy. This is what I wanted to just see, because gold is really, and I know silver's been crushing it too. You might have seen I own CDE. I might own Pan American too, but I like, again, precious metals, both silver and gold were looking good. Copper 290, okay. Palladium, palladium ones, this chart, this was another really good looking chart that was on my list. Oh, okay. It's been really trendy, and it used to be, so one play I like for this, it's the play I like for this, and for gold too, is it used to be Sibanye Stillwater. What the hell's the new ticker? Shit. It's into it was in the trendy list, and I just didn't mention it. SBSW. Oh yeah, it's right there too. Ooh, okay. Yeah, they own the largest palladium mine in the U.S. Did anyone know that? I mean, its name is Sibanye Stillwater. It merged with the old Stillwater firm, and I mean, people know that, right? I'm just kidding, but I feel like a lot of people weren't talking about it. I'm like, and palladium was crushing it. I saw the palladium chart. I'm like, okay, who owns palladium? Where's all the palladium? And it was called like SBGL is like a gold company. It's classified as a sector and industry. It's a gold company, and I don't think anyone's classified as palladium. I'm like, holy shit, this is a sneaky way to play palladium, and it went up. Wait, how much did it go? When was I getting? I was getting involved. Oh no, it sold. Yeah. Oh, did it do a stock split? Wait, what is this? Oh yeah, I was getting involved right around here, $3-4. So it's not up that much, I guess, but something to add it to your list. Add it to your list. Euro nav. Okay. Yamana Gold, BSX. Okay. All right. A good fresh start to this first stream. Thanks for the folks who tuned in. This is great. The over-under, I was talking to my wife, we thought it was going to be, we got to be 1, we got above. So this is excellent. Thanks for tuning in. I hope it wasn't too boring for you. But Yeah, well, I don't know what these streams are gonna look like. Maybe the times will change too. It's up for discussion. Just depends on what people like. But you get stuff moving every day. You know what I mean? Like things are up every day. Oh, we didn't even get to the daily movers. Oh boy. Okay, so this is what I was gonna do. Oh shit. So I was focused on the positions because I was trying to catch myself up with all that I have been missing. Look at this Riot. So I'm a little bit embarrassed to admit that I owned Riot because it was one of these trendy names. I've owned this. And Sandridge, I mentioned that one. Oh, I can't believe we didn't get to this. Wow, 3 hours flew by. Okay, so maybe 3 hours isn't going to be too long. Wow, shit, a lot of shit was up today too, huh? Damn, this would have been... Well, that's okay. There's a lot of overlap with stuff we talked about today. Flex. Oh, that's a really small cap. That was interesting. Damn, a lot was up today. Yeah, okay. Why was everything up today? Wow. Wow, this is a lot. I try to trim. This is the daily movers. I try to trim it at like, I used to trim it at like 100 or 200, and then it would frequently break because some days it'd be a ton. So then it used to be 5% or above. Then I had to trim it to 10% or above, and then and wow, that's a lot of that's a big. So let me just check who's down today. Kodak. Kodak. Oh, geez, that would have been a fun one to talk about. Poly 1. So I used to own this one. I must have sold out. I must have sold out of this one. Where's my chart? Oh, yeah, I got to do the chart over here. What? What the hell? I'm pretty sure I own that one. I don't know why that chart didn't work. I got to look at it. Maybe sometimes when they change their ticker or if they... if there's acquired, or obviously there's a whole bunch of stuff that chart might break. QTNT. Yeah, I own this. So I own some healthcare, some biotech stocks. Is this a biotech stock? I think so. All right, so not much. A big update though. Okay. What's the market doing right now? Futures? I look at futures sometimes, just for fun. Not too much. You can't put too much stock into it. It's kind of just for fun. Okay. All right. I guess that's it. For this stream. Thanks to those who tuned in today. The next one we'll keep it right now because I've already published it for Monday, Wednesday, and Friday. We'll keep it 7 to 10 p.m. But I'm open-minded about this. 3 hours flew by. I thought it was gonna be. I need more beer, but I thought it was gonna But I have so much to get caught up on. This was partly by design. Is that I've been derelicting and keeping up with some stuff, and I've been looking forward to kicking off these streams so I can get back into it and keep following up on the stuff and digging in deep and being on the ball with everything. And so today's day one, and then we'll keep doing this. But things are moving every day. That's what I was gonna say. Is things are moving every day, so it might be helpful to have more frequent streams, maybe shorter. Plus, not always. You want to. Some days. This is the thing with I'm past 10 right now. So I guess that's okay, right? Is YouTube gonna come after me? Am I in trouble if I go past 10 o'clock? Is that it? And what was I gonna say? So sometimes when you perform research, right? Like, sometimes you feel like doing it, sometimes you don't. That's the thing of a research, and that's the thing with anything, right? Sometimes you're really into it and you want to spend time, and sometimes you have to. Like March, you're working 24 hours a day because there's so much to keep track of and keep your finger on the pulse. And then other days, there's not much happening. You've already got your portfolio. Not much is moving. You don't feel like doing shit, That's just the nature of the market. You need to be cool with that. So that's why it was tough to pick some days and times for the streams. But that's so we'll see what people are interested in, and we'll see how it's going. But I could envision having more frequent streams. And then sometimes there might be a 5 hour. Well, I can't plan for that. But sometimes you get big movers, and I'm like, shit, I need to do some research, and I might as well stream because that's when this stream will be most helpful, when a lot of stuff's happening and I'm looking at everything. And it's unfortunate I wasn't streaming in March because I did so much stuff and we all could have been doing it together, and it would have been a good idea. But that's okay. It's never too late. And keep an eye out. So I as soon as I finish, I got to finish up this stream because I got to finish off that new Gamestop video that I'm putting together. If you saw the other Gamestop video on my stream, it's way too damn long, and I didn't edit it. I didn't edit it that much. And if you see my videos, I haven't edited too much. That's on me. I know I have to edit it to make it a better experience for you. So for Gamestop, I did put in the time. I finished recording the stuff, and I'm finishing up the editing right now. It's real close. And then I think I got it down to like 20 minutes, but I really consolidated everything and edited and cut it up. It's just so it flows a little bit smoother. So keep an eye out. I expect to publish that, hope tomorrow if I can finish it up tonight. I'll publish it and then check it out. Let me know your thoughts on GameStop. I can't do in-depth videos if you've seen this stream today. I'm not so dialed into so many stocks. I don't want to make lengthy videos like that, but for GameStop I kind of have to because of the uniqueness of the play. But for I want to make other videos. I'm calling it the Kitty Corner, where I, like right now, who wants to tune into a live stream for 3 hours to try to get my opinion on a stock, right? If you agree with my line of thinking on stuff, you might just want to just pull up a video and be like, all right, what's the Roaring Kitty view on this particular stock, right? So that's why I want to do the Kitty Corner series, is I can just probably do it in a couple minutes. And like the GameStop one's taking me forever because I have so much to say about it. But other videos, like I just pull it up, I'll be like, boom, insider buying, boom, trades below book, boom, the chart looks good. And then that's it. That's all you really need. It's not a buy recommendation, right? Because how I invest isn't necessarily how you can invest. I'm trying to put the disclaimers everywhere. But that's the idea with the Kitty Corner videos. So GameStop one's a longer one. I wanted that to be the first one too because it's the biggest position in this portfolio. But keep your eye out for some other videos too. Like some of these videos, I talked a whole bunch about like RFP today and RRC and some of those other ones in the portfolio. And let me just see. I didn't really think about which ones. Oh, TSE and NGD. All right, so I could probably put together some videos on these pretty quickly, and I think that would be helpful for anyone who cares to just get the quick take. What's the quick take? What was the thesis behind this original purchase, and maybe what are the latest views on it? So I'd like to do that, and I think I can be quicker about it, just that GameStop. Plus, the GameStop one's forcing me to learn how to use some new video editing software and being better at jump cuts and stuff. I'm like learning all that. So, yeah, so these ones, I'll probably start with the ones that are the top ones in the Run Kitty portfolio, so keep your eye out for those ones as well. But hopefully this GameStop one's out tomorrow. That would be great, because I kind of just want to get it published and be done with it. But, yeah, that's it. All right, so thanks Nicholas, thanks Nick for tuning in, and I think that if there's a couple other viewers too, thanks so much for tuning in. I really appreciate it. It's nice to have people tuning in for this, but it's just yeah, I hope you had a good time, and hope maybe see you on the next stream as well. But otherwise, thanks for tuning in, and have a nice night. Cheers. Now I got to learn how to. This is my first time ending a stream. I don't even know how to end the stream. I think I just click end stream over here. I don't know, but let's see. Or do I stop on my OBS? I use OBS. Do I stop on OBS first? I'll probably just do end stream first. All right. Have a nice night.